Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio is our senior economist, Tracy Shuchart.
Good morning, all.
Good morning, Shai. And joining us on the big screen is the one and only senior market strategist at NinjaTrader Live, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli and Shai. It is another glorious day on the island. We are ready to go today.
Yeah, I've got my green on underneath here. It wasn't on purpose, but I don't know. I woke up, I was feeling green. Markets are, Dow's not green, but S&P, NASDAQ, Russell, green. We'll see what happens. It's CPI morning, so we'll be focusing on that throughout the morning. We've got a great lineup for you. Julian Brigden from co-founder and president of MI2 Partners will be with us. A fantastic guest. I hope you guys are enjoying these guests every day because they've been pretty phenomenal. Yesterday we had Nick talk all about the dollar. Really had me thinking last night, Shai. I said we'd talk about this more tomorrow morning. Here we are today. I think his outlook, look, we listen to a lot of people. I talk with you every day. We talk with Jimmy. We watch people on X. I think he's really kind of spot on what's going on with just the overall markets and why equities just can't even find the time to consolidate, let alone a significant pullback. I put that in my note this morning. It's people not wanting to be in the dollar. You see what happened in NVIDIA overnight. I know you'll get into the news. But markets continue to want to be in stocks. They want to be in gold. It's up modestly today. Bitcoin's had a rotation, but it's Bitcoin. It is what it is. Right. The way that Nick laid this environment out, it makes a lot of sense to me.
Yeah, absolutely. And I think it's really interesting that he pointed out that, if you look at 6E, which is euro in the futures market, it's kind of one-to-one with the equity markets, with ES. So that is kind of a really interesting comparison, something, traders may want to take a look at.
Yeah, and I just think that when you just look at the overall macro theme, when you look at what's happening in a market, for me, because, I moved to multi-day time frame, I have to understand a little bit of what's going on in the macro. I don't need to be a macro trader. I'm not. I would never be, really. It's not really my specialty. I like technicals, but I do like to understand a macro theme, and it does help me understand why the markets are doing what they're doing. And the question a lot of people will say is gold giving us a warning sign? We talk about this with PAX. Is gold a hedge against not only inflation, but against central banks, right? So people worry about that. Then you look at why is Bitcoin going up then? Why are people continuing to buy stocks if there might be these warning signs? And you see these people putting fear out there, when in reality, the trade is just rotating out of the dollar. And sometimes it's just that simple, and that just seems to be what it is.
Yeah, absolutely.
Yeah. Jimmy, this morning, overnight, very quiet. Coming into CPI, the only thing I see with a one handle in terms of percentage moves is natural gas down 1.5%. But again, just like Bitcoin, it's natural gas, Widowmaker. Right. What are you seeing in the overnight trade?
A little bit of an anticipation coming to, we have that big data that Shai's going to walk us through at 8:30. So I think there's a little bit of anticipation. The Treasury bond market is kind of just sitting right on top of a couple of week area of support right around that 112 and 1830 second level. We're right, cash yields are right south of that 5% level. And it's just kind of waiting. I look at this pattern and I'm like, all right, we're just waiting for something to happen. And I think we might see a little bit of movement one way or the other on that 830 number in the long bonds. I don't know for sure, but we will see. Look at crude oil is unchanged basically. The Bitcoin's given a little bit back. I know it says 2.2% on the screen, but that's not, that's the Bitcoin, as you pointed out. And the currencies, the Euro FX you just talked about, there's on the futures, there's that 1.17 level where we've almost retraced back down from the July 1st highs. And we're kind of stuck there. And that's a key 23.6% fib level. It's also almost to that 21 EMA. So there's a lot of stuff converging at that 1.17 level for the Euro FX. We'll see if this is just kind of a minor retracement or there's a move afoot.
That's going to be something I'm going to watch this morning on the data, and I'll go over this as well today. Post CPI, what's happening in the euro? Look at you've been talking about the dollar. Not to say that we haven't had that discussion, but I think, again, sometimes it takes a few times to hear things of what's going on in the market to really kind of get a grasp of it. And I mean, we'll continue to watch this and what's happening in the dollar. I think for traders to keep an eye on what's happening in the euro coming out of the data today could be a good lead to what happens in the indexes. We'll talk more about that. Shai, overnight, yesterday we had the tariff news. You had also some stuff with Russia. I know you're going to clarify, and NVIDIA. Walk us through it.
You're right. So overnight, we are seeing a bid in ES and NQ. We had a couple big announcements from tech. We had NVIDIA is able to resume H2 AI chip sales to China and U.S. reversal. Now, Besant was on Bloomberg early this morning. I got a chance to watch that, and he basically said why the U.S. first cut off those exports was as a negotiating tactic, in other words, for critical minerals. So not very surprising. We've seen that they do this a lot. So, but we have, needless to say, we have NVIDIA up 5% pre-market. And we had Zuckerberg says Meta is going to build a gigawatt-sized data centers. We've got Meta up $5 pre-market. Oracle to invest $1 billion in cloud AI services in Amsterdam. Oracle also up overnight, as well as semi-stocks up overnight in pre-market. So that is definitely helping lift ES and NQ because those are some big heavy hitters within those indexes.
And maybe clarify a little bit what happened yesterday, too, with Russia. I know that there was some news about that.
Right. So yesterday we had that Trump presser, and I was posting in chat what he was saying, and he kept saying tariffs on Russia, and everybody was saying, but we don't really import much from Russia, so what does that matter? What he really meant, and I said yesterday, I think he means sanctions. So Letnick did come in and clarify that what they meant was secondary sanctions on Russia, meaning that the U.S. would impose 100% tariff on those countries that are importing Russian goods, particularly oil.
Got it. Okay. We talked a little bit about this yesterday. I said, how much of an impact is that going to happen, with him and us, and how much that's going to matter to the market? Again, market doesn't seem, I would assume that obviously oil prices are going to be reflected.
Well, yeah, exactly. The reason we saw oil prices kind of tank after that is because the oil markets had anticipated we were going to get some huge announcement on curbing Russian oil exports, as Trump had said that he had this huge announcement on Monday. And so markets were disappointed because he said he's giving them a 50-day leeway, leading traders to think, man, it's just not going to happen.
Yeah. Here's the one thing, again, with oil, and it's been the case really all year. Man, if you're a breakout trader in oil, or if you're trying to, even these short, little breakouts that you see from one daily or weekly high to the next, the news pulls us back into the range every time. Has that not been a common theme this year? Remember down at 55, we were talking about this. All this news negative, bang. All of a sudden, positive news takes us up. Then you get the big move, what was it, a few weeks ago, up to the high 70s. All of a sudden, negative news right back in the range. Crude oil, it's just one of those markets this year where this theme has been, do not stay with anything too long.
Right.
Because there is been news that has pulled us back in this range multiple times. And now, of course, there's going to be the one time you fade a move where the news is going to come in and accelerate it. And that's kind of the way things work in these markets. But nonetheless, it's just one of those markets where I have, as somebody who looks at multi-day stuff, I've been trying to get kind of, involved in crude, but the tape continues to keep me out of it. I've talked with Merritt about this. It's funny, we have Merritt today. Crude oil has just been a sloppy tape this year. A lot of news back and forth. I think it continues to be that way. If you're short-term day trading it, just understand, this is what it's been all year. It's not just you.
Right.
Of course, good morning, chat. Seeing a lot of our regulars in here. Good morning, Leo from Columbia. Infinity Works, Adam. Of course, we've got Paulie in here, and we've got Engineer Bear, who beats us in here every single morning. We've got John, we've got Nanit, we've got Fana, we've got Mark, we've got Trading Poker Rob, My Sarona, Kenshin, Videos to Arcade, Thomas Gaines. Great seeing all of you here with us in chat this morning. So pre-CPI, Shai, let's go over data for today. What do we got coming up?
Right. So at 8:30, we have core CPI, CPI, New York Fed, Empire State Manufacturing, real earnings, 8:55. We have Redbook, 9:15. Bowman Speaks, 11. We have Cleveland CPI, 12:45. We have Barr speaking, and then 2:45, Collins speaking. And so out of all of this data, all the markets are looking at right now is CPI and core CPI.
Yeah. And what are we expecting for this?
So we have consensus for core CPI, which is ex food and energy, at 2.9%, and CPI at 2.6%, with energy adding 0.8% versus minus 2.6% prior, and food also expected to be up due to gains in meat and imported goods due to tariffs.
And what is the range of what the experts out there are predicting could happen with this data?
This time, everybody seems to be pretty much in line. So everybody, the economists kind of think that this is going to be softer, even though it's higher, kind of softer than expected, and certainly softer than when the Fed first cut rates last September. And so they don't expect the Fed to do anything about this if these numbers come in line. That said, they do expect core PCE, which is the Fed's preferred metric, that's out in July 31st, to come in hotter than expected. So that number will be also looked at with a lot of scrutiny.
So, I mean, as usual, if it's a significant beat or miss on either side, because predictions are actually right in line, expect a decent move in the tape. And so we'll be watching it. And also, if it does come right in line, probably not much happens here. Before we get to Jimmy and start going over some charts, and we're going to get ready for the Edge Report preview, we have a great guest today for this, the perfect guest as far as I'm concerned.
Oh, absolutely. We have Julian Brigden, co-founder and president of MI2 Partners. I had a chance to work with him a few years ago on a macro report, and he is amazing. He's got over 30 years of experience in macroeconomic research, policy advisory, and trading. He's had some great calls over the years. So looking forward to talking to him and what he is seeing in the markets.
Yeah, I've been following him on X for many years. Really enjoy his work. Really looking forward to that. Jimmy, I know we're get ready for an Edge Report here in just a moment, but again, CPI, that's the focus. I think the euro and the bond market are going to be the two markets I keep an eye on. I mean, equities to me, again, I don't necessarily see too much of a shift here, especially with the Nvidia news being what it is. I mean, who knows, unless the number comes in way hot and bonds just get smoked or something like that, then maybe. But again, it stems with the bond market and the euro. What are you going to be watching heading into CPI?
No, those are two absolute markets to look at. I'm also going to look at gold just to see if I know there's a relationship there with the US dollar, of course, on gold futures here, but we're going to keep an eye on gold as well. And I was looking this morning to see if there's any tells. Bessent was on surveillance this morning, and he admitted that he gets the number a day ahead of time, but he doesn't talk about it during before the release. And then a couple seconds later, and I'll give you a quote, he says, "I wouldn't put too much emphasis on one inflation number." So now I'm like, is it going to come in hot or not? It was a weird sequence this morning, man.
We'll see.
Jimmy reading the tea leaves. Again, I mean, like we said, that's why I asked you, Shai. It's been weird. A lot of this year, we look at themes that are happening on a regular basis, but we've had some really wide ranges of what they were looking for unemployment, what they were looking for a lot of these data points. Yep. Now we're seeing a lot of the experts coming in right around in line.
Right, because I think that's because they've been wrong this whole time on inflation and expecting it to come in much hotter than anticipate than it's come in. And so I think everybody's kind of brought down their inflation calls.
Yeah. Welcome to the world of trading. It's market loves to prove us wrong no matter what we think. All right, let's get into it. All right, it's about that time, everybody. Jimmy Cagnina with this morning's editor's report. Take it away, Jimmy.
All right, we are going to start with gold futures today. Right now, we're still kind of hovering above this 8 and 21 EMA. They're all kind of tight right now, right next to each other. Prices right now, 33.61. I do have this area of resistance highlighted in my rectangle up here, and that's a several-day area of resistance, and that's at 33.76. That's where that starts. And noticeably, we wicked up to that 61.8%. So ideally, I'd like to see this a little bit more. I'd like to see it close above the 61.8% to say, all right, we're going to start shooting for this new target, which is around 34.77. So we'll see if that area of resistance holds or not, but we're pinched right between those moving averages and that rectangle up at the top. Stochastics are getting to that 80 level, so we'll see if that means anything or not. Intraday, though, we do have some great Mentor Q levels. We're almost at that 0 DTE high vol level. JAX 3 is a little bit south of that at 33.55, and then below that, JAX 1 at 33.50. So those are good targets for the bears. If you're really bearish here, we got S1 all the way down here at 33.37, give or take. And then that one-day min for Menthol Q, 33.27 on the downside. For the bulls, there's also some great targets. We have this JAX 1, which kind of frames the top of the daily range today. We've wicked to it once. We tried to wick to it earlier, and that's approximately 33.75. I'm rounding a little bit. But then we have a gamma wall, a 0 DTE gamma wall, a little bit higher than that at 80. And then we have JAX 4 and one-day max way up here when we'll just focus on that one-day max at 33.91. So there are some great targets here in gold for sure. We'll see how that number reacts. I do want to just take a peek at the E-mini S&P really quickly here because, we did have some earnings come out this morning. I think the bank's earnings came out, and they were pretty good. We had some good NVIDIA news, in theory anyway. So we're kind of consolidated here in the E-mini S&P, right? So just from a longer-term picture, we have that base I have here, support approximately 62.60, and then we have that resistance up here approximately 62.24. We keep probing into it. We're a little bit into it now as well, and I don't know if the earnings had anything to do with it or not, but that moving averages, we're just marching nicely. Yesterday I was concerned because we actually had the body of a candle below that ADMA, but it didn't hold. As Deli pointed out in his X, boom, they're just, keep pushing it up. Intraday, there's some great targets as well. And let's take a peek at that really quickly here. We have that JAX 1 level at 63.50. That's right at R2. Two areas of interest. Those are key levels for me. So we'll see if we can get up there. Above and beyond that, we have that one-day max, which I love. That secret sauce there by Menthor Q at 63.66, give or take a couple of ticks. If we do get a bid. On the downside, though, for the bears, there's plenty of targets. Now we're sitting right at this point of control right now, which is a pretty prominent, dominant point of control so far. We don't have that much volume traded so far. Well, we do 141,000. That's not a bad start. But that point of control, we're right at it right here from the session volume profile. That's at 63.29. Yeah, it's a P-shaped profile, but it's very immature, right? It'll mature over time, and we'll see how it fills out, because overnight we had just a tiny bit of volume. We're also above that session VWAP up here, telling me buyers are in charge at least for now. We'll see if we break that 63.25 or not. That's that 0 DTE resistance level there. And then going down here for the bears, support's pretty much at JAX 2, right? We haven't seen JAX 2 yet, but we got close. That's 6,300. Below that, we have that pivot, which is at 62.95, pretty close. And then a couple more areas of interest that are converging here. This JAX 3 level and this S1 level right there at 62.74. It's going to be a long day for sure. We already talked about bonds, give or take. Let's just throw up the Euro chart one more time. Real quickly here. This is the Euro FX versus the US dollar. And here's kind of my 23.6% outside fib retracement right north of that 21 EMA. We had a nice trend up, turnaround doji, nice normal retracement. This could just be a little light flex, maybe not a big flex, but a couple of baby candles in a row which is, again, reflecting, in my opinion, anticipation for CPI. And then really quickly here, intraday, let's start with some targets for the bulls here. Point of control is relatively high. We have R1, which is kind of defining the top of the conversation so far, one spot 1739. Previous session's highs, and then we have a high vol level here, which is kind of important, 1.175. For the bears, we have that blind spot, which is right next to previous session's lows here, approximately 1.17035, and then below that, 0 DTE, and then S1 as targets as well. So a lot of stuff, a lot of possibilities today. Deli and Shai, that is today's Edge Report. Back to you.
Thank you, Jimmy. We are now joined by Julian Brigden. He's the co-founder and president of MI2 Partners. Julian, been following you for years. Pleasure having you here. Good morning.
Thank you very much for having me on the show.
So I want to start off with talking about just the overall theme of what you're seeing in markets this year. When we see the equity markets continue to kind of shrug off any sort of negative news. I know yesterday we even had a little bit of a pullback with the 30% Mexico and EU tariffs. Here we are again, bullish NVIDIA headline, right back up again. Markets continue to shrug everything off, but you have a long end of the bond market which stays relatively weak, stays near the bottom of the range. Gold and Bitcoin still stay relatively bid. What do you make of this?
So I think we're kind of at an inflection point here where we started at the beginning of the year, well, really the end of last year, writing about the initial, let's call it, Trump 2.0 agenda. It was clearly very negative for the dollar. It would have been disastrous for the equity market. You would have ended up with what we refer to as a nasty kind of rotation. So you'd have corrected the massive outperformance of the US equity market versus the rest of the world via a crash in US stocks. So then obviously we got that pivot and we've moved back to something that looked, at least initially, more like Trump 1.0. So good time Trump. And in that environment, you've got a positive equity market. The dollar can be a little mixed. It's not really the main focus, but it really goes back to this sort of equity market. But it's generally bad for bonds because it's reflationary. And I think, as we push forward, we're really trying to see where that balance lands. The market overwhelmingly believes we're still sticking to that 1.0 agenda. I'm a little skeptical. I do think the president, for the right reasons, is trying to rebalance things like the current account deficit. And so we'll see. So look, if we stick to this agenda, I think the issue remains that equities can do okay. I still think US equities generally underperform. But the risk is that the discipline, you're just going to leave one disciplinarian in the room, and that's going to be the bond market. And I think, as one of your earlier guests was saying, when I look at markets, the thing that I'm most focused on here is, sure, the long end is very problematic, both in the US and in Japan, arguably too in the UK. We've seen some very big moves, even slightly further down the curve in Japan in the last couple of days in the 10-year sector, pushing yields higher. There's a very, very clear level now on JGB yields, which comes in just below 160. And when I look at 5 years in the US, which is the one I'm keeping a close eye on, because there's a lot of investors or professional punters who have steepener trades in, so they're betting that long-term yields are going to rise considerably. They have it in the 5-year versus the 30-year. So they're betting on higher 30-year rates and they're betting on lower 5-year yields. So the pain trade there is if we get a push up in those 5-year yields. And there's a very, very clear defined trend line that comes in off the sort of January 15 highs on a yield chart, and it comes in right around here at 4%. And I think it's arguable that if that were to break, you could make a case to saying that we're in a triangle that could catapult us maybe up to 5.
Yeah, and so that's obviously something that the president talks a lot about, is cutting rates on the short end, because that's what the Fed would control. This morning we've got CPI, where if that comes in a little bit hot, that could be something that you think disrupts an important trade to look at.
Yeah, look, as I said, I think, picking one number, we generally think there is going to be this bump in prices. You can see it from all the PMI surveys as well, what companies are telling you. I think, we don't know exactly when it's going to hit because a lot of companies front ran the tariffs, so have, had large buildup of inventories, so they don't have to push pricing through yet. They only really get it to do once a year. There are contractual obligations where they can't put up prices immediately. But I think, look, if we're raising $300 billion a year, which seems to be the sort of current run rate on tariffs, someone's paying that bill. And it ain't all the exporters, right? It is definitely going to be hit on corporate margins or on consumers. I don't believe there is a generous bone in the US corporate sector's body. So I think if they have the ability to shove through price increases, they absolutely will. So that's coming. It's just a question of timing, right? So that's always the difficult bit because we don't know when those inventories run out. We don't know when those new prices get negotiated in contracts. So I think between now, sometime in Q3, we'll start to see it. So whether it's today or tomorrow, or next month, I'm not sure, but I'm looking at all these bond markets and they're coiled.
And when we look at the euro, because the euro has gone up a lot this year compared to the dollar, when we're talking about tariffs, this obviously makes European goods less competitive, which is a problem for that economy that's heavily dependent on exports. So, what does this sharp appreciation of the euro compared to the dollar going to do to European economies? And at what point does kind of the ECB start getting worried about this?
So look, I mean, the ECB doesn't have the potential inflation problem that we do. So the ECB is in much better place to be able to ease. That said, like the US, they have a very tight labor market and wages that remain reasonably high. And I don't think, a move back in the euro is necessarily, the tariffs are much more important than the level of the euro at this level. So, I mean, we made it clear that, they're okay if it moves above 120. I think speed is always an issue. And I think there's a much bigger story going on here in the dollar, and that is that the whole world is long US assets, to tens and tens of trillions of dollars. And the administration wants a weaker dollar by hook or by crook. And I think as we move into Q3 and into Q4, certainly if the Fed eases policy in the face, let's say, of sticky or slightly higher inflation. I don't think they will, slash if inflation really materially moves up. But let's say we get that bump up in tariff-related inflation and they still ease and they look through it. Then I think what we're likely to be running in the US is what is called loose monetary. So rates are not that high. We certainly have loose fiscal. And historically, that combination is absolutely toxic for a currency. So I don't know whether I want to push it here. The dollar, index is down at some very multi-year trend lines, off the sort of 2011 lows. You can make a case for that if you use a non-log basis. On a log basis, it's arguably broken already. But I think we have not got away from this weaker dollar. And I think, what we're seeing here is a little counter trend rally. You would not believe the levels that my underlying model suggests that the euro could go to. I mean, at the beginning of the year, we came right out of the gate and said we are looking for a 30 to 40% down cycle in the dollar multi-year, like not this year. We're down, 8 to 10%, depending on how you measure it. I think this is going to continue to decline over the next few years.
Yeah, I mean, that gets it gets really interesting to see what that does across the board. We've got CPI here in just a minute. Shah, give us a quick preview of what's coming out for CPI today.
Yeah, so for CPI, year over year, 2.6% expected versus 2.4% prior. And then for core, which is, of course, ex food and energy, is expected is 2.9% versus 2.8% prior.
Got it. And I will be keeping up the bond market, the short end and the long end. So looking at treasuries and bonds, and I'll take a look at the euro. Julian, just as that number is just getting ready to probably come out here, we'll go to you and then just get initial thoughts. But again, everybody, the key thing for me today is going to be watching what bonds and treasuries do and the euro and see if that spills over into equities at all. And Shai, whenever that number comes out, spit it out to us.
So CPI was 2.7%, slightly hotter, and core came in at 2.9% in line.
So what would you call that overall, Shai? Just right in line? Say slightly hotter.
Slightly hotter on CPI, but again, core is probably more important. So in line with expectations.
So bonds rally, equities rally, euro. Let's see what that's doing right now. Euro. That's what I figured. So that's what happened. So again, weak dollar, Julian, and that's ultimately that's the play here right now off of this morning's CPI data. I know.
Sorry, I really do think that that's the big trend. And look, as I said, I think, we've moved a long way since the beginning of the year. So some sort of counter trend rally, is entirely reasonable. But I think structurally down. And I think, the only question that we have to ask is, that in itself should encourage you to get out of generally US assets. They generally underperform in a weak dollar environment. This is when you're supposed to be buying the rest of the world. This is when you're supposed to be buying commodities. This is when you're supposed to be buying emerging markets. If indeed this is the beginning of a big dollar cycle, which I believe it is. So it's just a question of tactically, how you play that, right? And that's kind of the important element.
The question I have about this overall trade is that at what point do equities, I mean, we've got earnings coming up again. At what point, because now yesterday, Nick Jovanovic talked about this, and I think he's got a great point here, is that one thing that's happening now with earnings in U.S. equities is that expectations were set really low, right? And so now you're going to come in probably with a lot of beats across the board. Everything's going to look all fine and dandy. But at what point do U.S. equities maybe start to look at this and say, okay, maybe we're getting a little bit ahead of ourselves? Because the weak dollar trade, I get it, but equities have come back so far, so fast. At what point, Julian, or what do you think breaks or not necessarily breaks the equity market, but at least causes some sort of a pause or concern for a rotation?
Well, look, I mean, I think to me, look, I think as I said, we're finely balanced. So if we can, it's going to be this question of, if we break to the downside, which is not my base case at the moment, but if we break to the downside, then in equities, then I think you'll see, unemployment rise relatively quickly. Remember, we have this labor market where essentially there's very little growth in labor. Now, some of that is a function that we have no immigration at the moment. They were at 75% of the growth in the labor market. But if you start to see unemployment start to tick up, not my base case right here, right now, our work suggests sort of flat to sideways, then I think that would get very interesting. And that could, that would be recessionary. It's very hard to stop unemployment rising once it starts rising, and it's usually far too late for the Fed to be cutting. Certainly at this stage, I think that would be the case. And so you'd end up with a recession. And in a recession, in a post-war recession, the average decline, it's actually since 1929, the average decline of the S&P in a recession is about 30%. Okay, simple as that. Alternatively, let's say we keep kind of grinding higher. Unemployment sits here. It's very, very low. We have no labor force growth. And then we try and grow next year as the stimulus starts to come through from the tax cuts, the CapEx accelerates from all the depreciation allowances that were put in the bill. Then I think we could very quickly run into wage pressure again. And I think that's core inflation to sum it up. So basically, we are caught here as to which way we're going to break. And as I said, I think, we're heading into August. It's a quiet time of the year. But I think as we come into the autumn, we should get some clarification around the direction in which this thing is going to break. And my inclination is certainly on a relative basis, and this is where it gets challenging, but on a relative basis, it's not to be long US equities, to be long commodities, to be long overseas equities, and even to start looking at emerging markets. I mean, I think if you look at places like Brazil, Chile, South Africa, those ETFs look incredibly attractive.
Got it. And we'll end there. Julian, everyone follow Julian on Twitter, Julian MI2 on Twitter. We will put the link in chat. Like I said, been following you for years. Always love your insight.
Absolutely. Thank you.
Yeah, thank you so much for joining us on the CPI morning, and really appreciate it.
Thank you.
You know, again, coming off of this, it's hard to find anybody at this point that, number one, nobody's really too bearish U.S. equities. That's number one, right? Even from where we are right now, you're coming at levels that, all-time highs, weak dollar. Again, the theme to me that I see is steady as she goes as to what you've seen so far this year. Julian talks about job markets, wages, things that could break U.S. equities, things that are down the road, but nothing imminent.
Right, nothing imminent. And I think what he was really saying is not that he expects, markets to tank by any stretch of the imagination, unless we get into a recession.
Yeah.
But they would just underperform other markets. The ES, meaning U.S. markets, would
Correct.
just underperform in general. But interesting, he likes commodities. I love hearing that one. So hopefully we'll be able to have him on again, because I'd love to talk to him just about commodities.
Yeah. And the other thing is, it's like, gold, Bitcoin, euro, those trades are going to stay in favor. You see big moves, rotations lower in Bitcoin. I'm not a big Bitcoin guy, but even look at yesterday. Nick said one of the biggest traders that he said, Solomon, who was a 30-year bond trader, is trading Bitcoin.
It's trading Bitcoin.
So realize that I think for a lot of equities traders, I wouldn't be surprised if you see a lot of, NASI traders start looking into trading Bitcoin, just because the trend remains very powerful. And of course, people forget there are Bitcoin futures and there's micros.
Right.
Yeah. So those trends to me seem to be the ones that seem more intact. Equities are just going to be bumpy. I mean, they're going to be bumpy, grindy, higher, but again, no imminent threats. And that to me is, what we look at. Of course, a Trump tweet is always around the corner, but who knows? But still.
Also.
Yep. All right. Thank you so much, Shai.
Thanks.
All right. Let's bring in my guy, Josh. I haven't seen you in a while, buddy. Looking good. How are you?
I mean, nothing that a midlife crisis and just retooling your life won't fix. So you look as good as ever.
Are we midlife now? Are we
you
midlife
may be.
now?
I'm not.
40s? Yeah, I mean,
you said your birthday, right?
Great to.
I just realized I think you're just a
48.
year older than me. Yeah, so I'm right behind you, brother.
Yeah. Yeah, well, welcome to the party, pal. You heard kind of this morning coming off of CPI. I know that you're definitely more your trade with profiles. So you're going to look at more of the profile. We're going to take a look at your charts here in a moment. But initially coming out of that conversation, I'm curious. Someone like you who's been around a long time, had a lot of success, a lot of technically driven. Just kind of wonder what your thoughts are just on the overall theme we talk about, how it is more about the weak dollar and how that is playing into markets these days.
Yeah, well, I mean, for one, it's rough coming behind a Brit because you can never sound as smart after that. So
never.
But here's the thing. They're all fascinating conversations, but you and I know, like at the end of the day, there's got to be a trade out of it, and it's got to be within the time frame that someone's going to be actionable within their playbook. And I just don't think that those narratives are necessarily helpful. And like the market is going to move, those auctions are going to move. Often they're going to move in a time frame that's further out than we think is going to be there. I'm always reminded that the natural this goes back from like my hedging days. What's the natural position of the participant in that space? So, even if we're talking about U.S. equities and U.S. equities having headwinds, but what's the natural position? The natural position is to buy that. Most participants, when they think about equities, they want to buy it. So there's going to be this passive buying pressure, even in, challenging headwinds, that is going to be there. And so be really cautious about, buying into some of the, bearish narratives. Not saying that, we don't have headwinds, and I kind of agree with the timeline, although I think it's more of this fall, like we would realize more of that. I mean, I think it's more mechanical than it is anything else. I mean, we're going to go into, uh, that August SEP OPEX cycle, and things can kind of unwind from there. But yeah, that's kind of that's
Yeah.
kind of my read on it.
No, and I think it's spot on, really. I mean, when you look at the markets, when you have the market, well, look, we know equity indexes, they're built to go higher. They are what they are. But when you have an underlying macro theme that even supports that even more, it gives you the tape that we have right now. I think that's ultimately what it is. And I think as a day trader, we come into each and every day and we're going to trade what's in front of us no matter what. But I think it's important to understand that when you have long-term trend and macro and short-term aligned, be very careful of fading that is more of the way I look at it. Is you don't want to be over. To me, it comes more down to positioning. As a short-term day trader, I'm not going to be heavily positioned on the short side right now, looking for a quick buck to rotate when equities continue to break out and you get these themes, that are behind it. So I'm going to start off this morning. A couple things that I'm looking at right now. One of the things that I've really built my entire, pretty much career on. Is just understanding where we are on the daily, and I look to see if we can rotate. A lot of that comes from, all of that really comes from what are happening within the Bollinger Bands. Are we expanding volatility? Are they going outward, or are they coming inward and we are in mean reversion back in trend? That's something I've used to gauge what's happening. Equities continue to have Bollinger Bands expand outward, stay above all these short-term moving averages, which is just a simple thing that I look at to show that, we're back near highs. You've got data this morning, like Shai said, comes in a touch hot. Markets reacted higher. I look at this again. There's just nothing telling me that this market's going to stop. It shrugged off the 30% Mexico and EU tariffs. Nvidia gets a good headline. Markets are bullish to me. When you look at S&P and Nasdaq, Nasdaq's making a higher high today, taking out last week's high when it actually was somewhat relatively close to last week's low, just coming into the week. Again, nothing keeping equities down, just bullish to me is what I see. I want to go to, because I'll let you dive into the equities in the shorter term charts a little bit more. What I do find interesting is when I look at the bond market this morning, and I don't know how much you look at the bond market, Josh, but I will say this, like for me, I don't think that they matter much at all right now, and I've talked about this every morning. It's why I like having these macro guests on here to understand kind of what's happening within the theme of the market. Bond markets are just range bound. They react a little bit positive today off of this morning's CPI data. Pax and I talked about these key levels down here below. If I do start to see bond markets break out below previous day's lows, it does get interesting to see how equities react. It's kind of like a one look just to see, okay, put an alert. If bonds are making new lows, kind of what's going on. They're unwinding their morning trade from CPI. Does it have any sort of impact on equities? And I would look at a similar thing in gold as well. Gold has just been very range bound. I'll look to see what's happening there. If it starts to pull back into the previous day's lows and starts to take them out, which is pretty close to it right now, does it have any impact? Again, these markets, I don't think they're going to have any real direct impact on equities today, but because it's CPI, I like to see what these other markets are doing and see, do they unwind their trades? Is it maybe a lead to what happens with us in equities? But again, it's one of those things, it's a one look. If it's not happening, it doesn't matter. If it does, it's like, okay, some market awareness. For me, I kind of keeping it short and sweet this morning because I'm more interested in what you have on your charts. But from perspective for me on the daily equities, no reason to stop rallying. Keep an eye on the other markets on a CPI day to see if they maybe trigger a mean reversion back from the morning look. But overall, that's what I'm seeing.
Yeah, I don't disagree. I mean, around bonds, I mean, I think, well, my best trade this year has been in December. I went long 10s, short 30s, and I've been in that. I'll be in that until the Fed cuts rates. because even though like the overall space has just been kind of sideways, that spread has continued to widen as we're anticipating that there's going to be a rate cut on the short end. So that's the only trade I've had. But like from a short-term basis, when I look at today, I mean you're right on it. We're in that summer trade, which I mean I mean you and I would discount the meaning of the timing, but when I'm working, I'm still working with developing traders all the time, and they just don't think about, oh, like there's better times to trade. And there, just like there's better prices, there's better times. Right now is one of those times when, we're going to have a market like this. And, I've got, Qs up here the last couple of weeks. I came into the week and it's really kind of all about this 925, 975 area. We got a lot of confluence of multi-time frame VWAPs. We've got GEX levels in there. Built out in the composite profile. So really, unless we saw meaningful acceptance below 825, like there's nothing breaking here. And we've got a little bit of a gap higher here just to start. I'm just gonna draw on this, but unless we can get back kind of below 100s, I think this is the direction today. So we're already kind of bouncing a little bit. I've got this is just kind of a tip, if you're looking at like a CPI or, pre-market, I use this with non-farm payrolls as well. I'll typically, mark the 30-second range from that release as well as that VWAP. And that kind of becomes a range I can play around. And then I'll see where we are accepting that in the RTH. But, we're imbalanced to the upside. We could easily push to 350. Kind of this week, I'm looking at that 23, 350, 500 area anyway. And that's the path of least resistance, unless like if we could get an accept inside of yesterday's range, close the gap, then there is an opportunity to get back in here. But there's so many references, it's just going to get really choppy and messy. So one of the things that I'm harping on, lately is trying to find those areas within the auction where there's a little bit clearer trade. I think I saw Merritt. He did a great kind of like quick walkthrough, just talking about where you're getting out there, where value's expanding. You've got, a little bit of conviction. Those are much clearer places to be, especially in summer. And so hopefully, I mean, if we can hold out here, that'll be great. I don't know. I don't know what anybody's going to do. We'll see when the session starts, but that's kind of my plan. And then we'll go from there. I'm going to take a look at the Russell real quick.
Yeah, let's take a look at the Russell. And real quick, I want you to, I like how you take the 30-second. So you're basically taking something that you would look at maybe from an opening standpoint. You take that same philosophy of what an RTH open would be, and you do that on a CPI data point.
Yeah, and it's not, it's not the same kind of meaning to the auction as like an opening 30-second range, but it is a meaningful. You've got that first little burst of movement, so there is some positioning around that. I can use that as a good reference to kind of add an additional layer of bias around what are we looking at in the auction. So, it's. Typically, I'll set. I mean, TradingView is great. You can just set alerts on those anchored VWAPs and in those ranges, and just have it keep hitting. And I'm like, oh, we're above it. Okay, great. Oh, we're below it. Okay, great. Okay, great. Where are we most likely to go? Yeah. So if I look here at Russell, which is the product just can't find a bid to save its life. Same thing. I mean, we can look at 20 charts. They're all balanced. Even just looking at my worksheet this morning. I typically track like three variables I'm always tracking is where's price, where's the value of the last 5 days and last 20 days. You see how many products are just, balanced or very near that, very close, but not quite. We're all waiting on additional information. Nobody knows what's going to happen next. So it's hard to find somebody really committing to dollars or committing to positions that way. So we'll see. But yeah, if Russell can break above 72.6, I like it. Towards 80s is probably the clearest idea for me today. And I'm just going to put an alert in there because that's going to be, if we can break that, I'll be in that direction.
How much are you looking at the indexes as a whole? These days, when we get near all-time highs or we're near all-time lows, I'm always looking at the index as a whole. Are they all making, progress in the same direction at the same time? Is there divergences? Are you keeping an eye on that at all?
Absolutely, yeah. So like even if we just look at, kind of where we've been over the last month, and I count the the crypto as indexes, just kind of following how the CME marks them. But I mean, it's really, there's just not been a whole lot going on. I mean, if you talk about the typical, three that we look at, let's get rid of these because they're just moving so much better than everything else. Let's see, where's my Russell?
And this chart is just
ES,
showing what they've done on a relative basis percentage.
yeah, which is just it's just not there's just not a lot of significant move away. And overall, I mean, look, if I go back, we're not going anywhere. On an intraday basis, I'm seeing lots of like where we're, Nasdaq's up, Russell's down, Russell's up, Nasdaq's down, and the ES is going to follow the Nasdaq just from its component pieces. So all that rolls up and say there's just no conviction. So I think that's a clue for all of us. Like, how are we gonna approach it? Whatever, be open to whatever is out there. It could be.
So you think, I guess I'm curious. So for the S&P, I mean, this is the part where it gets, anytime we're at all-time highs for short-term day traders, it's not the easiest because, again, it's like, oh God, I feel like I'm long at the top, or, and it's, you look around and you feel like you're alone on an island because you just bought the high and it rotates, $2 in the S&P and you can't wait to get out. It's hard to separate ourselves from that. But I think that when you have the indexes working together, and you do see that they are all going together, that's something that for me, it's always just giving me more confidence to say, look, you know what, we're at all-time highs, block all that other stuff out. Just know that if all the indexes are going up, I'm buying the dips. I'm staying, I'm going to obviously follow my strategy, but I'm going to stay more committed to it. But when I do see divergence, that's when it throws me off.
Yeah. Yeah, absolutely. So just to your listeners, what Delia has said there, that's a really important piece. And even if you don't trade these other products, maybe you just look at ES, or just trade ES, but look at the Qs, look at the Russell, see, are they all moving in tandem? Is there broad conviction across the equity space? Obviously, ES and Russell and the Nasdaq are going to move more in tandem than with the Russell. But when they're all firing away, I don't think that's a trend you want to get in front of. And then when you're at these all-time highs like this, so, a typical summer behavior to just kind of bank in the back of your brain is you'll get these little liquidations that happen. And it's typically somebody who's trying to chase. You're in this low vol space, it's creeping up there. And then something comes in, a little sales program, they got to bail. Those little liquidations, because they don't last. But like if you do want to participate to the upside, which I think is the place that you want to be right now, you're like waiting for those liquidations that don't get any follow through is like the best trade location you can get. Assuming that it's within one of your playbook trades. But yeah, in the summer, if they're all aligned, you got to go with where it's going.
Yep. What do you got in the S&P for today?
I haven't even looked at it. I mean,
so these days you're mostly just NASI and Russell?
Yeah, just NASDAQ Russell. I mean, here's what I look at from the S&P. I do look a lot at the VIX curve, and so I look at that relative to itself. So I'm looking at the spreads across the different durations to kind of get an idea of like how complacent are we in the curve. How underpriced are the hedges, or are under hedged? I would say we're classically under hedged right now. However, we are in that summer period, so we can stay like this for quite a bit, but eventually this is going to catch a bid. So this is why I wouldn't be like holding equities, holding a lot of long equities. We may get another percent and a half higher, but you're going to get lower prices in the equities as we come into the fall, for no other reason than the fact that we're completely underhedged, and that's going to get bid up, and that bid up is going to take us down. But as far as like today, I mean, just same thing. ES has got what? That we're 63 quarters, down to 62.70. I think you got to continue. It looks like we got a GEX level here at 31s. We got to hold above what, 36.24, or you're, likely going to rotate back towards 6,300. But anything coming into this area, I don't know what this, there was some move overnight. I was trying to look early to see, what the news was. I know Besant was talking early, but I think this was before that.
It was the NVIDIA news and the China
Is that what it
chips.
was? Was that what it was? So I
Yeah.
think that's a reference to have on your chart. Like I typically, when we get events like that, I'll throw a little VWAP on it and just see how we respect it the rest of the session. So outside of us failing through that, I think you're looking at, if we can get what we've got. We expect to move is 63.50s. So yeah, I think if we can hold 31s the first hour, I think you're looking for 50s plus. If they can break out of this range.
I've known you a long time now. I mean, it's been many years. I don't remember too much about you using the GEX levels, and I think you are someone who I know. Look at everybody. I hope you go and learn more about Josh. We want to have him more in the programming. He's a great trader. He's a great guy. Understands the markets very well. Trade with profile. You and I have done a ton of stuff on profile over the years. We use Mentor Q data and hear a lot with the GEX levels. I'm curious, as someone who's really in the short form, you're really more of a profile trader from what I know you from, and now you're using GEX levels. I see you're trading NASDAQ even more, which is interesting to me because a lot of the GEX traders I know are trading S&P, but you're using them in S&P or in NASDAQ. I think that's, we got a lot of NASDAQ traders out here. Talk to us a little bit about that.
Yeah. Well, okay. So, and you know this, more than most, is that if you're going to be in this business for any length of time, you have to have a tilt towards continuous improvement. And that means that there are parts of the markets and parts of auctions that never change and are the same behaviors that were there during the tulip bubble in the 1400s and are there today. But I tell you what, I think it was November of 23 when we had the first day when 0 DTE or like 1 DTE options represented more than 65% of all options traded on the day. I think that fundamentally changed the way markets behave. From just a raw structural piece, if you kind of work your way through how a product is transacted and also the number of products today where there's more volume in the options than there is notionally in the underlying. And we really do live in a world where the tail wags the dog. I've always used the profile because what's a profile? Profile is positioning. It's showing me where people actually took and placed transactions. What's a GEX level? It's positioning. Where does a GEX level come from? It's based on where participants have actually placed positions. And there are points of, if we get past those, where people have to do different things. It's no different from a profile. I think I just see them working in tandem, but I am increasingly of the conviction that if you're going to be in the space going forward, that especially if it's a product where there's a really robust derivative space, I'm still a little suspect of relying on gamma stuff when you've got a product that has a pretty weak derivatives. Like Bitcoin would be one of them. Like I see people putting gamma levels in Bitcoin. I'm not convinced that those are that effective yet. But if you're in the S&P or you're in the NASDAQ or Russell or gold or crude, where there's really, really strong derivatives being traded in those, I don't know how you can't respect that anymore. Those are going to be magnets, just like profile references are magnets, and they're references that every participant can see, or the participants are going to drive it can see, and it's been really helpful. It's like when I talk to Brian Shannon, he's a fellow Coloradan. We check in every once in a while. And, I had a playbook trade back in the day that was looking for a prior value test in the profile. And like we would open, maybe we open above the prior day's point of control and like we're in range and like we're coming back to that sucker and I'm looking for a kiss of that reference. But like we would get down there and then we would turn around and take off. And I was like, what the heck's going on? Like there's some markets don't turn arbitrarily. There's some reference there that is in the way, and that's what keyed me into VWAP. Like there was a VWAP there that somebody hit, bought, and took off. I folded that in. Now it's like I find these prices where it's like we just bang up against this price for hours and hours. Like, what the heck? And one piece of that is just the lack of liquidity at the book. I mean, you've got somebody trying to put out a 100 car position, and there's 5 offered. Like, they're just going to be sitting there forever. But the other piece of that is these gamma levels. I mean, they're going to keep hitting it. The market maker or the guy on the other side of the trade is auto hedging that and is not going to do anything until we get meaningful movement past it. So it's been really helpful for me to know, hey, here's an area that's going to be really noisy. Stay away from that. It's not as clean. Wait until you get to some clean air and then less turbulence.
Yeah. I love hearing that from you, Josh, because like I said, everybody, I've known Josh for a lot of years, and look, we're constantly looking to get better and adapting to what the markets are showing us. And much respect for you, man. Great having you on NinjaTrader Live. Can't wait to have you back on again. This was absolutely awesome and fantastic to see like what you're doing, and it's so cool. So everybody, go and follow Josh on what he is doing, and we will see more of him on NinjaTrader Live. Josh, thank you so much, my brother.
Yeah, see you, buddy. See you, Deli. Have a good one, man. Peace.
You too. All right, Tanya. Good morning. How are you?
Good morning, everybody. I'm great. How are you doing today?
Good. Your favorite day, CPI. Little bit of movement, not a ton.
Yeah.
Markets back in all-time highs. Got an NVIDIA headline overnight, moved us higher. I don't know if you had ever heard with Josh before, but Josh is a good dude. Love seeing what he's doing. It was interesting hearing kind of his perspective coming in into the markets today. And, I think we're all kind of in the same kind of boat right now. Equities continue to push up, make all-time highs. You got a little bit of divergences here and there, whether it's between the Russell, the Dow, the S&P. We're not like all moving up in a clean fashion. But nonetheless, we have the market that we have. What did you see initially coming out of CPI this morning?
Yeah, I mean, honestly, with CPI, like we didn't move a lot. Because like you guys mentioned, we had that overnight news and we were already up, so it kind of feels like that took away some of the expansion there. So while we're moving up to all-time highs, like we're at all-time highs, this just looks really bullish on the daily for ES, and it looks even more bullish on the NASDAQ. So there's just like, I don't want to fade this market, but I also don't want to be buying at a premium. So it's just about me waiting for those setups where there's a potential retracement or a run on stops and then going for the next high. Because yeah, it's basically what's been working. Although yeah, yesterday was definitely not as clean as I thought it would be. But today, I mean, we're at 23,192 right now. It's very difficult for me to frame a trade. I typically I would have loved it if CPI, if we were back into like this, sweeping this low overnight and then like we were somewhere near here or something, and I'd go for highs, right? But the market's just gonna do what it's gonna do. You can't just put your will into the market or hope everything's just gonna span out the exact way that you want it to your plan. So yeah, I mean, it's a kind of underwhelming start to the day with CPI there, right? Because we moved like maybe 50 points or something like that. Yeah, we've moved just about that during that news release. And yeah, it's not really anything I'm looking at, honestly, like where I want to fade it so quickly. I'd rather just wait for a retracement to get back long. Essentially something like that. So although that is my favorite day to trade, it's a hard to pick a spot here where I'd want to be long and then where I would put my stop at, where I would trust it. So it's just kind of about how the open plays out, I guess. But yeah, I mean, if we're looking at the daily, right, we're already looking like a really large. We already expanded quite a bit here. Yeah, 200 points. Maybe we can have like 100-point more upside, 150-point more upside could be possible, but it's just so hard when you already have that downside wick formed. We created most of the move, like honestly, like we already hit probably the ATR of the day because it looks really close to yesterday's range expansion in like the past few days. But now that we're getting out of the range, maybe it'll be above normal since it is in CPI. So maybe I'll take a look at the indicator to see what's like the average true range of the past few days. And then we could just take a look here on NASDAQ. Yeah, it's quite small, 236 points. And so like, we already hit like 200. It is CPI where we could have a larger day than normal, but that's just kind of showing I like to trade more reversals because there's more expansion on the other side and there's an easier way to frame your risk. Here it's just really hard. So like I'd rather almost, wait for tomorrow where I think that it could be definitely a third green up day, rather than today kind of press my luck versus like seeing like testing which low is going to hold, right? So yeah, I mean, I'm not going to really rush into the market today, or I'm going to kind of see what happens at the open. Not my favorite kind of structure to trade CPI with because you're at all-time highs. What are you really going to do if you like trading reversals and such? So yeah.
Yeah, one of the things I talked about with Josh is where I think it gets interesting at all-time highs is what I like to see is when all the indexes are breaking out and making a new high at the same time. That's when I like even like narrow pullbacks. I'll buy at and above price to try and get in and ride the train. You've got Dow down today. You've got Russell not making all-time highs. You've got NASDAQ, the upside leader. Goes back to what you and I have talked a lot about in the past, Tanya, is that, and this is a situation where if I'm between S&P and NASDAQ and I'm looking to trade today, I'm going to buy the NASDAQ over the S&P because they're the upside leader and they have the higher probability of continuing to push higher because that's where the flows are coming into today. I think the S&P is going to feel a little bit more of the back and forth where you've got Russell not up as much and you've got the Dow actually down. I mean, the S&P is the one that has the tentacles across the board. Of course, it leans more towards NASI, but again, why try to buy the S&P catching up to the NASDAQ when the NASDAQ's the upside leader?
Yeah, totally right there. NASDAQ is clearly the upside upside leader, and rather long NASDAQ in this case, even if like what some people do is actually they kind of wait to see if ES retrace to a level that they wanted and then they'll buy NASDAQ. That's not a bad strategy. Because then some people will anticipate, okay, NASDAQ won't even come back and take out this low. And then if you see a divergence there, I mean, I don't see why not, but totally, I wouldn't really be long. I mean, with ES, we've seen a lot of kind of barcode more type action when the NASDAQ had much more of an up day like yesterday. So definitely would rather be longing tech at all-time highs. And we'll see if something presents itself, maybe like one of them. I mean, it seems like ES took out these little London lows during CPI or right before CPI. NASDAQ didn't. That's the only kind of divergence I see, which could end up panning out where like that's why we won't really retrace anymore. We'll just kind of expand another 100 points to the upside. Still makes it tough.
Yeah, and the poll this morning, we got poll's 58% this morning bullish, 26% bearish, 16% neutral, so way heavy. Not often that you and I see the poll up to around 60%. It's usually mid to high 50s and bullish. Everybody's pretty bullish today across the board. And again, neutral is only 16%. What I find interesting is that people are starting to lean more towards bearish in their outlook, just again, because when you get to all-time highs and you have divergence, it's hard to see the tape continuing to go higher. I do think there's going to be some rotations today in S&P, but NASDAQ is the one, again, it's like, man, if that thing is going higher, you do not want to be the first one in trying to top tick a high, because it's just, the thing just does not look like it wants to stop at this current moment.
Totally, totally. Like, make sure to wait for your confirmations and don't be front running things. That's basically where people end up losing paper cuts, and then it ends up snowballing into like a gusher, right? So you do want to keep those paper cuts small. And if you're going to try to short, honestly, then you kind of should look for a divergence at a high and then a break of structure, not just kind of front running it, right? And that's a hard thing to do. I mean, and that's kind of why the psychology of like why sometimes the market's just going to keep going higher, because there are too many people trying to like time the top, and then there's stops put in there, and we're just going to keep stopping people out on the way up higher, on the grind higher, and that's a painful type of trade to be in.
Yeah, I mean, going into some other markets, and I don't know if you've looked at any of them. I know we were trying to get you to see if you were looking at gold. You know, gold this morning kind of flat after the number, pretty much unchanged on the day. You know, bond markets had an initial bounce. Again, they're trying to hold it. It's just not doing so much. Pretty quiet following CPI outside of equity indexes. I know we mostly follow that, you know, what's going on there. You know, we were talking a lot this morning about euro. Euro is flat on the day, starting to trickle back down near its lows. So I like to see what's happening in other themes, you know, post CPI. Right. You got a CPI number that comes out. Did everyone kind of react one way, which it was to the upside? Dollar was weak, and are any of them rotating out of their moves? And most of them are. Bonds, not so much. I mean, the bonds are just quiet. Equities just stay bid. You know, I mean, again, it just proves that the equity market, they find anywhere where they can to go higher, and you look for like that rotation to come off of that, like you're seeing in these other markets, and those other markets are not showing us any lead into what's happening in equities. Equities are looking for every reason still to go higher, and I think that's important when I look at CPI days or any data days. Like if we all move together, gold moved up, euro moved up, bonds moved up. Did they all rotate right off of it? Is everyone saying that the news is, you know, was bullish, but, you know, not too bullish? Equities are the only ones that have just gone bid and stayed bid.
Oh yeah, totally. In regards to gold, I mean, we've been basically just building up in this base, like consolidation. We look pretty bullish because we ended up taking out like a weekly low here during June, and then we had this daily broke this previous daily high, and then we had a retracement here that held up. You know, and I'm kind of looking at this volume imbalance. We literally just held this up. We couldn't break this low. I think this is an important low, and then now it made another higher low, and a higher high. I would think that I would look for, versus like taking out yesterday's low. First, I'd need at least that. And then I look for like a breaker block to the upside, which is just like taking out a high that sweeps out a low liquidity. So if there's a high swing high before that takes out previous day low, I'd wait for that high to get broken to the upside again, and then try to look for longs, honestly. You're totally right. The indices just keep marching up higher. But they did develop a good like consolidation base the past what is it, like the past week? Yeah, since like the 4th of July here. It is kind of interesting. It actually looks like these last 2 days like look like pretty much how like the 2nd and the 3rd of July look like, with those two candles taking out a previous daily low and then going up to all-time highs again. So it's not necessarily true that like we're gonna just have another push up higher, a fast push up higher, because here we had a consolidation. We could have another one, but we did have a nice accumulation there. So maybe we will have some more upside. I can't go bearish, all-time highs. So just kind of look for buying dips. And then for gold, yeah, I'll see how we react at the previous daily low, which is about 33.48, and wait to see probably on like in the 5-minute For example, if we were already in like that low area, let's say this swing high, then I look for, and then we take out previous daily low, we come back into that level. I would need to wait until that high gets broken again with a displacement for more upside follow through. So I could wait for that confirmation to the upside. But yeah, I'm still bullish with gold.
Yeah. Oh, it's bullish gold, bullish Bitcoin, bullish equity indexes. I couldn't get that out. Bullish euro. Only thing I see that we've seen bearish on the charts is the dollar, and that's been a thing we've talked about here. Tanya, we're out of time. Everybody, hit the like button for Tanya. Hit subscribe. Hit your alerts. Never miss an episode of NinjaTrader Live. Tanya, have a great stream today.
Thank you so much. Good luck and good trading, everybody.
All right, everybody. I'm getting a lot of crap in chat today, and people are asking me if this is an ascot. Look, I mean, I got my green shirt. I put my green shirt on this morning for everybody. You get green, you get green markets across the board. What more do they want from me? They're saying I'm recovering over my birthday bash. I am. It's still, it's still a little cloudy up here in the Crudele brain, but I'm getting there, and I have to get there. Why? Because it's Tuesdays. It's time to trade the open with Merritt Black.
Okay. Okay. Okay.
Hey, man, listen.
I'm allergic to cats. Who's doing this? Was this Leo? Was this Leo's idea?
Listen. You think you're going to get away with messing with me every time before we leave? Listen, you think you're going to get away with this every time before I leave? He's giving me
this
shit.
wasn't me.
He's telling
I
me
had no
this.
idea.
He's saying something. I know. I did this to you.
Please don't put it back on my actual face because I'm crying. I'm wiping out the tears out of my eyes.
Every week he thinks he's going to say something to me and I'm going to forget about it. He waits for me to get out of chat. Oh, God, so last night I sent a message to production. I said, can you make Merritt look like a kid?
It doesn't matter what it is. Just make him look like an absolute idiot. That's the only request.
I was thinking about was, you remember the Zoom where the guy goes, Judge, I think there's a filter on here. And I'm like, I'm not a cat. And oh my God, it was
man.
It was so
that was really, really well done.
I know. He thinks I forget about this stuff, everybody. No, I was holding on to it. I can't even.
I'm living rent free in your head.
At the screen. It was awesome. Every time before I leave, he's telling me to work. He's working on my golf game. He's telling me to do this.
Everyone thinks this past weekend Crudele was having this great time. He's on the PJ, but he's really sitting in the back, just thinking of how he's gonna get me. That's really all he was doing the whole time.
There's no way I was not coming back with some vengeance. I'm getting ready to go off for a week, and he's saying, he's telling me, he's throwing. Oh God, that was awesome. So I don't even know where to begin from this. I mean, do you have any positions on? Where are we? I feel like PAX right now. Is this thing live? What are we doing?
What happened? Where am I? Oh yeah, I do have a position on.
Oh God.
No, I bought that. I bought the little dip after the pop with whatever the news release was. I've scaled out of 2/3 of the position into this rotation to a new high. And then, hey, we can see if, like you were talking about earlier, about how you can kind of get in and see if you can catch a trend or whatnot. So, it's all-time highs. I don't have any inkling as to whether it's supposed to trend today or supposed to mean revert. I have no clue, right? Not that we ever do, but there are times where I have much better setups and reasons to really hold and press. For this, it's like, look, Delta is strong. The buyers are in control of the tape. And I bought a classic, what we call imbalance pullback for NADRO trading. And I've scaled out of 2/3. And so we'll see if we can catch a little more.
Yep. I mean, it's the hardest thing to do, Merritt, is when you hit all-time highs is to buy the narrow pullbacks because they all feel narrow, right? Because the minute you pull down, everyone's looking and goes, oh, we just made it an all-time high. How do I stay with it? And again, it goes back to, you've been down this road before. You know that the overall bigger picture is bullish. Your short-term stuff is bullish. For you, it's a clear path. I'm not fading it. I'll fade it if it makes sense to fade it, but I'm not going to fade it.
Yesterday, I thought it made sense. Yesterday, I did pretty well shorting and early on before the trendiness, if you will. So during this sequence here, I caught this little move here, and there were some good reasons for that. Structurally, we had kind of a profile reference in this area, and it rejected it. But this was a problem. When we got down here, I could show you my Discord chat with students and stuff. This was a problem. So if this is going to happen here, we're going to come out. Oh, look, another like real capitulation, kind of like we saw in the Delta up here at this high. Not going to take it, guys. Not going to take it because the bulls holding this level mattered. And so here we are, 18 hours later, quite a bit higher.
Yep. All right. I'll hand it over to you. It's always great having you here on a Tuesday.
This
I can't
is
wait
war,
to
though.
see
You've
what
started a war.
what comes out of this on social.
I'm just going to throw
fine.
it out there. You've started a war.
It's fine. Look, it's no problem. I welcome it. It was worth it because I will be laughing about this all day. Like people are going to be like, what is the matter with this guy? Why is he laughing? And I'm just going to say, listen, just go to social media. You're going to see some cat memes today. I'm just saying.
It took me a good 15 seconds to realize it was like a little emoji of me. I thought it was some weird segment you were doing. I was like, what is that? And then I was like, no, it's moving with my mouth. This is a problem.
Boom. All right, everybody, hit that like button for my guy Merritt. And in all seriousness, go check out what he's doing with Apteros. He's the man. Love watching him on NinjaTrader Live each and every Tuesday. Hit that subscribe button and hit the alert so you never miss an episode of NinjaTrader Live. Merritt, I'll see you in chat, and I know I'll see you on social media. See you, my brother.
See you, brother. That was he did me dirty. That was rough. That was really rough. We may never financially recover from this. No, that was good. That was a good laugh. What's up, chat? How's everybody doing? Yeah, I figured somebody might bring that up. Raf bought, kind of referencing a tweet that I put out yesterday. And I threw the gauntlet down. I said, if this doesn't get more engagement than the burger post, then I'm just quitting the platform. And sure enough, you guys did great. You did the likes, the retweets, everything, and it was quickly more engagement than the burger post. So it validated my faith in humanity and what we're trying to to help people with on that platform. So I could talk about that real quick, just because I kind of left it hanging a little bit in terms of the benefits and what can we do about it and some best practices. So let me pull up the tweet real quick. I love how Stream Deck likes to just like, you try to go over a few columns and it just goes, just slides somewhere else. The absolute biggest challenge, this is a tweet from me about 17 hours ago. The absolute biggest challenge I see for what would otherwise be profitable traders this year is poor tactical adjustments to extreme differences, which we've had in volatility. There are swing trades that are just not going to work when vol is really high. And I'll explain that a little further here. And there are scalp techniques that just will not work when the vol is low. So let's talk about this a little bit, because I think it's, if we do nothing else today, then this discussion on this topic will be valuable to you guys. And if you think it'll be valuable, well, I'm going to ask it again. Let's smash that like button so we can continue to help promote the good that is going on with the cat masks and the good trade talk on NinjaTrader Live. So, swing trades that don't work when vol is high. That one is a bit easier to tackle. I'm just going to draw a little bit on my screen. Let's just say there's a market where you get a bullish setup or whatnot, and you're long from here. Well, how do markets behave in really volatile situations? There's a lot of, you think you're absolutely golden, and it absolutely rips back, and then before you even know what happened, it's back up here, right? And this is not like I'm on a 1,000 volume here today. We're slowing things down from last week's 300 volume, which we could also talk about later. But anyways, imagine this is like a 30-minute bar chart here, right? You're in a trade for hours, and it comes back and gets you. And then next thing you know, a couple hours later, it's headed towards where you thought it would go. That can lead to chasing. That can lead to all kinds of other issues. But the point is that when volatility is really high, it's hard to find a safe place for stops. It looks like a major low is put in. Markets come roaring back on a news release, and then, as we saw during the really, really high vol, a month ago, 2 months ago, you get huge candles like that on a tariff headline or whatever, and something like this. So it's really tough to find a safe place for a stop for swings. What can you do? You could really, really, really trade with huge stops. I don't think that's really feasible. Killing the risk reward that much with such a huge wide stop, I don't think so. You could try to be nimble and try to just accept that stop outs are going to be a part of it. And so, as I often trade with my short-term trading and with longer-term trading, it's all about the art of the re-entry. You're going to get stopped. Markets are going to go hunt liquidity. They're going to do that. So finding re-entries becomes a really important part. And a lot of swing traders don't do that. A lot of swing traders don't take as active of an approach and tactics as I do with swing trading. So that's something that to consider when times are tough for swing trading. Another thing that happens with our NADRO frameworks, I'm just checking the time here, minute and a half or so from the opening bell. Seeing a good bit of selling hit this thing. One option is to flatten out here, as we've kind of obviously made a high and are probably going to roll back. I'm just going to play it more simple and just keep things as they are. Another thing with swing trading in high vol environments, with NADRO in particular, for those of you who are students of that, is that if we're looking at a value area, for example, right? how do we like to trade that value area? Well, we'd love to see something fail down here, come up into here, and then give us a really nice move in here and a nice turn. We're able to get long, and then it goes up to here, right? That's kind of theoretically what we're looking for. What happens in high vol is that rather than getting this pullback and this setup, you end up just getting this, right? And so there's just, I was left holding. I'm thinking of some phrases I can't say on TV, and so anyways, I was left in the dust, trying to be swing long in Q, right? When it essentially V bottomed off the lows, right? I was trying to get long, looking for longs, ready to do it. Opening bell here. We'll pay attention to the market for a moment. If we do get a really good excursion up into kind of the +2 standard deviation area, I will look to take it off short term and just take advantage of that, what I call more of a windfall type of move. Buyers weak so far on the open. Sellers also weak. Low participation open here in terms of dominance of one-sidedness. I can adjust my stop here. No longer needs to be below the swing low. I'm not moving it to break even. I'm moving it just past the 0.5 standard deviation. If we get into that area, or I'm kind of right at it, if the market pulls back that far, then the uptrend is in real threat of ending. Now we see some selling. So that's where I'd want to be out of the position. Really good selling on the tape. Let's see what the buyers have. A little momentum shift there. They try to turn it, try to press it up. Not impressed with the buyers so far. Order flow can lie to you just like anything else, guys. So real quickly, because I would like to wrap up this discussion. If you guys have follow-up questions and things like that, we can talk about it. We got a couple hours here, so we got time to kill, especially if I'm going to end up in this position, which it looks like I'm not. What about scalping techniques that stop working? Short-term tactics that stop working when volatility goes lower, as we've seen more recently. What about that? Going back to the tweet that I'm referencing. Well, I think it's the quality that we're looking for is clean momentum. And that oftentimes is what we get short term. Think about it. High vol, I just got through talking about, we wouldn't call this clean momentum, would we, on this 30-minute chart? But what about on a, just for extreme argument, what about a 30-second chart? A 30-second chart, if we were to zoom into, let's just say this last little up leg, it's got ridiculously clean momentum, right? The bars are barely overlapping. They're really going once you got that momentum shift. So if markets were to trade like this, and I just got stopped on the remainder of the position. If markets were to trade like this all the time on any time frame, it doesn't matter what time frame, but my point here is that both can be true at the same time sometimes. you literally can't lose, right? If markets just did this, we would see, oh, look, here's a momentum shift from downward moving candles to upward moving candles. This is what people try to recreate with things like Renko and stuff. They think they'll be able to design the market to do this. Well, the market just doesn't do this all the time, right? No matter how much you dial in the settings. This is why I'm not a fan of Renko, because it's a false thing that people are trying to make markets do. If markets were to trade this way, you get long here, and then however you manage the trade, you simply can't lose because of the clean momentum. Well, what happens? What happens when volatility goes down? What does that 30-second chart start to look like? Oftentimes, not always, oftentimes, it starts to look like something more like this. Oh, look, downward momentum, upward. Here's that same pattern, right? Here's that momentum shift right here. Oh, it's actually breaking down. Yep, it's breaking down. No. Okay, now it's breaking up. Now we're breaking this high and we're going. No. Right? That's what low vol tends to give you. A lot of false shifts in momentum. Quite frankly, we've seen my trading suffer from chasing a lot of false shifts in momentum on the past 2 Tuesdays on this stream. So, case in point with my trading as well here. So this is just really, really important. Doesn't matter how good you get at trading, how proficient you are. One thing that's required, and this is why I love the general theme of what I think Crudele does with this show. I've said this before. He tries to key traders in every morning before the main trader comes on, like myself on Tuesdays. He tries to help people key in on kind of what's the environment, what are the catalysts, and then he gets some opinions on directional bias from some people and things like that. But understanding environment, what's in my Twitter bio, right? Context is king. Context matters. Lowe says, well, is it just a matter of throwing volume bars on a higher time frame? No, you can't just always speed things up or slow things down. I've seen a lot of traders fall into that trap. And it does seem like it could be logical, right? Oh, well, if there's more bar-to-bar overlap on this lower time frame, let me just go to a higher volume. And you saw me go to higher volume this week than last, in a sense, to do some of that. But it's not the same thing. It's not the same conversation. Slowing things down to slow down your trading, to slow down what you're seeing as a momentum shift, does not mean that the moves will be cleaner. It simply moves that there will be less given, projected, technically said to you momentum shifts per unit of time, right? And HF Trader is correct that, look, Renko's just another sampling method. There's no right or wrong sampling method out there. There is no holy grail of bar type, candle type, indicator. There none of that exists, right? You have to develop a toolkit of this is why apterostrading.com, go check it out. Nadro, it's frameworks. It teaches you frameworks, not buy here, not sell here. It teaches you how to see the auction process of the market, how to see risk reward where it's skewed, how to use multiple timeframes, how to dial that into then executing, as you guys see me do here week in and week out, to time your trades, to amplify risk reward is the main reason to go to lower timeframes and time up trades. So anyways, man, I feel like I've been rambling here since we got on this stream. I much prefer sitting in quiet than rambling. All right, that last push down was pretty darn weak. I'm so far I don't believe the momentum shift higher. I'm looking for something with the speed of the tape, something in order flow, something to tell me that the buyers really were taking that higher, and now they take out that entire candle, right? I just didn't believe that turn. That's something I teach my traders. Our site is apterostrading.com. I'll type it for you. And we're just launching Apteros Trading ES, or Spain. We have several desk traders for Apteros from Spain, very serious guys, students of Nadro who are doing well, and kind of the head guy who's mentored some of those other Spanish traders who've made it on our desk. He's an ex-pro athlete. He's just a tremendous guy, and I've worked with him hand in hand on several trading projects, and including him being on my desk. And so it just made a lot of sense. He's a good teacher as well as a good trader, so it made a lot of sense for us to expand what Apteros is doing. So if you're a native Spanish speaker and want to be a part of that group, they're going to have their own Discord community and things like that. We're just launching that right now. That was a better momentum shift right there, but man, I am always cautious trading from VWAP. I'm not typically a fan of trading from VWAP. Thank you, HK. At what point in one's trading career would you say is appropriate to give Apteros a shot? Very much look forward to it. It's kind of a chicken or the egg thing. In fact, I had this a similar discussion with some of our advanced group mentoring alumni recently. And one of them said, I wish I would have waited to do the mentoring until essentially now, until they were more advanced at their current level, right? But the catch is, well, if you hadn't have done the mentoring a little earlier, and they would admit this, that they wouldn't be where they are right now. They might have more fundamental flaws in their understanding of the concepts and their application of things, and things that they learned even subconsciously through the group mentoring. So it's tough. I definitely think there's a line. I see too many people who, I'm not going to throw any dirt here with any names, but let's just say go to some of these fake props, right? Apteros is a real prop. There are a lot of what we call fake props out there, right? They're just bucket shops. They're, that type thing. Not that it's tremendously all bad, but it is what it is. I see a lot of too many people who just have this mindset that they're not ready, they're not good enough, they don't have it yet, and they just go to those places. And what I have seen is that they just, because of a lot of the ridiculous rules and parameters and hoops that they have to jump through, they're more focused on that than just getting better at trading. And so what happens is they actually just prolong their learning curve to getting really good at trading. I see that. I really do. So I encourage people to trade somewhere where your focus can be on trading well. Your focus can be on getting better. Your focus can be on building this career, right, that you're trying to do. Not trying to focus on P&L, focus on jumping through crazy, hoops in terms of performance. If you don't think you're ready to perform, why would you go somewhere where the entire focus is on performance and getting a payout? And you need an attorney to figure out the rules in order to do so. Think about it. MW, if you are on my desk, you have a direct line to me and a direct line to our desk manager. In anything you need, we are here for you. We are watching your daily reviews, your monthly reviews, taking a look at the goals you're setting, taking a look at your statistics, your performance on our end. All right, so what do we have in NQ here? Markets rotational on the session. Buying was decent coming off of the lows. So those two pieces of information are counter to each other. Tryouts can be good for even for people who quote unquote aren't ready, truly aren't ready, for I think one main reason: a forced daily loss limit, forced risk management, which by the way is, don't get me started on what great prop trading is really about, which is about environment, and one of those things is risk controls, right? So being forced to stick to a DLL rather than maybe trading sim or somewhere where the DLL is too big, let's say, right, for it to be reasonable, because you'll never be able to sustain a career doing that, right? You might get lucky and catch a payout, things like that, but you're not building a career. Don't you guys want to build a career? Don't you want to go somewhere where, we're investing in you? Someone's looking over your shoulder and trying to help you and scale you up and grow you and do whatever we can with our literally our money behind you, right? You want to talk about a benefit? So I saw some, fake prop firm the other day talk about, hey, we're going to give some benefits of trading live, right? Well, I think a lot of people don't see that the benefit of trading live is that you're actually not in a place where you have a conflict of interest. How about that for a benefit of trading live? Your backer is actually interested in seeing you succeed. How about that? There's a benefit to being live, not being at a bucket shop. Using NinjaTrader or scalping for these trades. So here's how I trade, guys. I look every morning across multiple markets and I look for NADRO stuff, right? Which is narrative, context, good risk reward, things like that. If those opportunities are there, I was looking at crude oil earlier this morning. If those opportunities are there, let me check crude real quick. Yeah. Then that can be where I focus. I can put on intraday position trades, longer term trades, even swings, right? And then I typically have kind of my go-to when conditions are decent. And that is what's in the scalping course. Order flow driven with cumulative delta. With that, if any context is there that matters in the back of my mind, and then very short term with kind of what's in front of us and what's unfolding on the day. So I do both on a daily basis. Doesn't mean that I'll always have a big narrative NADRO trade to take, or doesn't mean that every single day I will come in and scalp, but essentially that's kind of my toolkit, if you will. It's both. YM's interesting. I think I saw someone else in our community recently talk about that. Let me check real quick. Okay. I go check on our community and there's me as a cat everywhere. All right, pretty sweet. Great narratives. Yeah, so yesterday morning, someone posted the YM as an opportunity. Gold is at an interesting spot, but there was too much dissonance for me today. Short term, I'd like to buy the bounce. Long term, right, yearly type of view is bearish for me, right? I know that's tough to say in a market like gold when you look at that chart, but it is what it is. I think that there's a bit of time acceptance. We did cross that 0.5 for those of you who follow yearly DVA and whatnot in gold. And then we came in and we just barely kind of one ticked to start this week at the Sunday night open. We kind of took out that high. What market were we talking about the other day that had a similar pattern? Crude oil. It wasn't on the yearly, but it was kind of monthly upper extreme fade, and the quarterly prior value with acceptance still below it. So apologies for those of you at home who don't speak this language that I'm speaking, but I'm just kind of talking to my people right now. So to me, we have a yearly extreme fade in gold. We have nothing on the quarterly because there's been no reference touched. We're in the middle and we haven't rejected either side. There's been no key recent rejection, no fresh condition shift. So nothing to do there. The monthly has dissonance. The monthly has a somewhat of a fresh return pullback back inside last month's value, which is bullish. But now we have this upper extreme kind of rotational extreme fade. We've just started to follow through from its DVA, which is bearish. So dissonance right there. And then right here, right now is bullish on the weekly. This is a breakout pullback of weekly prior value, and right off the lows today, right? And it's an extreme fade from the -2 to kind of give you the DVA there as well for the week. So mixed bag when you step through the time frames of gold, but gold and silver and whatnot are very tradable. I even have some people scalping platinum right now. Some of these metals are very good short-term instruments right now. And if you haven't ever checked them out, if you've just been in that ES, NQ world, I encourage you to check out the metals. Yeah, DAX and Bund are perfectly good. And then the pound, the euro, the yen, Bitcoin, crude oil, S&P, gold, copper, nat gas, NASDAQ, silver, corn, which is my favorite narrative today, soybean meal, the 10-year note. It's fine if you like the 30-year. I would only do one of the two. Soybeans, that's my market universe. I can't tell you how to set stops for longer term gold, Nayland. Stops. Here's a really important here's a really important thing for you guys to potentially consider in your trading. The idea generation, I'm bullish this market from this level, or I'm bullish if we get down to this level, or I'm bullish if we break out above this area, or whatever, right? Or if this indicator does this, whatever it is, I'm bullish here or bearish here. That is the idea generation component. It typically needs to be contextually driven, right? There needs to be reasons for it, unless you're the utmost of purist short-term scalper, in which you may not use any context. Fine. Most traders aren't that way. They bring in some context. The idea generation is one thing. The execution, stop placement, entry timing, sizing, scaling out, all these things, that's all accessing the trade and executing upon the idea. And they are separate things. I fell into that trap when I first started trading. I just thought that there was just a setup and it was just one thing that included all of that stuff. But the more you can separate idea generation from actually accessing the trade and trading it, executing on it, it puts you in a stronger place, a superior place as a trader. My 4-year-old son and I are growing some corn in the backyard. We've got 2 stalks that each have 2 ears coming up on them. Oh yeah, corn with the perfect bounce off of that area. Yearly extreme, monthly extreme fade, weekly return pullback, weekly extreme fade, CVA return pullback. A plus. with no dissonance. You could say that there's dissonance because the yearly's imbalanced down. Well, we have, you know, 60 handles to go, which is huge in corn, right? I quit following YM and RTY. Those used to be on my list. They're fine markets to trade. They're perfectly fine. I kind of culled them because I wasn't trading them. I wasn't using them. And typically, quarterly or annually, I take a look at process. I take a look at chart books, what I'm doing, what's working, what's not. And if I'm not using something, then I tend to just kind of get rid of it and try to I simplify and clean. All right, B period just started, right? As you see on my far bottom right chart, we have that second candle now. Technically a poor low, depending on your tick size settings for your profiles, but it did get a tick or two below the A period low. There was somewhat of a capitulatory move in the selling delta, as you see. Big candle into that low, and the buyers are pushing back fairly aggressively since. I do not like the poor low. I do not like the intraday DVA location. It's a perfect weekly location, but I'm going to look for that poor low to be cleaned up. I'm going to look for further stopping out of longs before I attempt the any potential long. The benefit of the Apteros Trout Pro is that when you come onto the desk, you have a $10,000 drawdown potential, static. And as you trade better and better, we will expand that drawdown. It will be even bigger as you grow and perform. That's the difference. Sellers showing back up. I expect the down move, if it gets to these lows, to be a blip. You'll see a quick little move in price and delta. A little bit more substantial, I think, than people might think. I'm not saying that will happen. I'm just pontificating a little about just based on kind of the ingredients for that are there. The pound is coming into an area of support. I've had my eye on that. We don't have other time frames starting to give us the confluence we need for kind of a NADRO setup there, but absolutely coming into yearly IPB territory for the pound. That is absolutely something I'm going to have my eye on. I'll just need to start to see some type of reaction, start to see other time frames give that supporting cast, as we call it, to that main narrative. So this is the poor low right here, the current day's lows. Both 30-minute periods essentially have kind of the same low, so it's what we call a poor low. There's a really poor high from yesterday as well. And obviously this is the gap. Buyers coming in off of this poor low, right? Here's that same area that I marked here, right? This is this. Here's the A period low. Here's the B period low. So I was looking for more of a dip into here and turn to buy it. We'll see. I'm fine with my current process goal of increased selectivity, a little bit more stringent trade filters. I'm kind of I'm trying to model for you guys being in a drawdown, making improvements, being a little bit more selective, things like that. Yeah, I think that's right, MLT. 345 a month. Is that high or low? What is that? You see what the sim firms do is they are a casino. They're running a casino. And what they do, and you can see what's his name, Simba or whatever, he openly talks about this, about how he knows certain firms won't work because of the way they've structured the price versus the drawdown versus how you get payouts and how hard it is. They all have a formula for that to have edge against you. Try firms who have you on sim, and they've been doing this long enough now, right? They understand, okay, if we charge this much, or let's back into the price actually. If we offer this much of a drawdown, and here's how hard we make the profit objective relative to the drawdown, and here's how much buying power we give you. And if you are going to take money from us, if you're sim trading, you're just simply taking tryout revenue from them to get paid out, right? That's what it is. That's what a bucket shop is, right? You're betting against the house is against you. So they structure all of these variables together and they figure out, well, what do we have to charge people so that our business makes a lot of money. Right. And that's why you've seen, yeah, it's Brett. Yeah, that's why you've seen him talk about, hey, this firm won't work because I know, look, they won't make it because of the way that they've structured the business, right? Because there's math. There's a certain, let's say, failure rate or whatever. And I don't have all those stats and numbers. I'm such a small prop desk, right? We don't have all these thousands of users that a lot of people, these big firms do. And so they learn those numbers, right? And that's why you see any Joe Blow who used to be in tech or marketing or sales support, all of a sudden they think they can run a prop desk, right? Because that's the only business they're running, guys, is that figure out the price to make money against the people. That's the business. Do you understand? So yeah, I'm sick of it. With Apteros, can you use Ninja with a rhythmic connection? I'm sure Brett has no idea who I am. He's probably never even heard of Apteros. You can use Ninja with a basic rhythmic connection if you have, I believe it's some type of lifetime license before a certain date. The good news is that we are close. I have a meeting with my dev later today. We are close to being able to offer NinjaTrader 8 with our tryout directly. Unfortunate that the we didn't take out the low. It is what it is. It was really at a fantastic spot in the weekly, but I didn't like the poor low and wanted to see a little better intraday DVA location lower, and so that was a pass for me. That seems to be the logic that a lot of people have come to, Bobby, is that first they're going to go to these other places, and then they'll come to Apteros when they're really ready. And again, what I said earlier is that I see traders go to these other places and they develop a lot of bad habits. Tryout is certainly a better place to learn in than being just in sim. Whether it's $50 or $350, you at least have a little bit of skin in the game. You at least you feel the emotions of being wrong, of losing an account, of whatever that is, of being locked out for the day because of daily loss limit. These are important things to feel and experience as you start trading and trying to operate. Is the desk the same as the courses, or is that the step after the Nadro and scalping course? You can either come directly to our desk if you're good enough to make it. You don't have to know anything about Nadro or our scalping techniques. Or obviously, a lot of our desk traders come from our student pool of people who we've trained and whatnot. Sellers coming back in, getting a little absorbed. Slow day, not a lot of movement across many markets. Yeah, obviously, if you've got some funds and whatnot, a personal account is a great way to go. Here's the here is my argument for you, and it's infallible. It is the answer. You cannot talk me out of it. Any of you guys, let's see who's in the conversation. Hey, Jude, I'm calling you out. Logan Curtis, I'm calling you out. Let's talk. Prove me wrong. I say if you just have some funds and you're just trading your own account, you might do well for a while. You probably won't, but you might do well. But I have a 20-year career as a trader, and I've been in professional prop environments and run prop now on my own. I've seen 7-figure traders, 8-figure traders. I've sat next to them. I've talked to them at happy hour. I have seen all their fills for years on end. I know, and myself is included in this, even the best need help. Sometimes you're off. You're going through something. You need a risk manager. You're not thinking clearly. You're not doing well. You might have that screw it moment. You need it. Sometimes you need help with technology. Sometimes you need a boost in confidence. Sometimes you need a slap on the wrist. Even the best need these things. They need to be pushed. They need to be developed. Look at any performance activity in the world. Do you see guys, other than Roger Federer for a period of time, do you see them without a team, not just a coach, a team? How many times can I say this to people? You're probably, most likely, 98% or more, not going to make a career out of just trading on your own. And this reason only is why real prop is the only way to go. So if anyone has a counter argument to that, I am all ears. We can have some respectful discourse. Yeah, there's definitely a, it's not an IPB. This is a extreme fade short here. For scalping students, it's got the BSR element. I just think that you really don't have any narrative behind it. And so it's absolutely purely just little scalp. We didn't, even from a scalping perspective, okay, so we have a small stop run through these highs, great. But the order flow was actually strong behind the buying. If the order flow would have been super weak and we would have gotten a little stop run, extreme fade opportunity from DVA, then I'd probably be short right now, but it wasn't, so I'm not. All right, let me check the chat. Welcome, Tom. Come learn at Apteros. Let us get a hold of you with your green ears. The quicker, the better, versus coming in with bad habits later. Are you saying that just due to the odds of blowing up? I think, Daniel, mostly yes. but not entirely. I think that you could also, let's say, for example, you had some risk controls in place where you literally couldn't blow up, right? Whether that's, as I've taught you guys before, how much money you keep in the account so that you can't lose any more than that at any given day or time, right? So you can put some risk controls in place with your PA, personal account, that is. But the performance aspect of, you see traders with these huge negative streaks where they just get in a very bad place and they're trading poorly, and there's no oversight, there's no accountability, there's no helping hand to step in, whether they do need that positive boost of confidence, whether they do need that slap on the wrist, whether they do need to be pushed to simplify, to maybe reduce size for a while. Whatever the thing is, you need expertise and wisdom to come in and help make those adjustments. Maybe they're not adjusting to volatility like we started the conversation off here today, right? Sometimes you don't know what you don't know, and you're so kind of, we all get those horse blinders on where we're just kind of fixated on something, and we can't really see what we need. An objective, experienced trader helping you with that is a big deal. Accountability with peers is a big deal, right? So it's not just about the ultimate, the pinnacle of bad blowing up, right? It's more than that. All right, I know there's been a bunch of questions in here. Yeah, you can see my account balance, Robert, right here. 54.79.60. I've got it right there for you. Where was I? Oh, a bunch of people have asked today, and you guys really should just look this up on your own, but I will cover it for you briefly. The difference between volume profile and market profile. They both can look the same. Volume profile typically looks more granular. For example, it might look like this. Right? Whereas market profile is going to look more simple, right? It's going to look like this. Right? You don't have all these little short-term notches and things like that. LVNs, low volume nodes. Market profile is built of literally, let's take this and rotate it 90 degrees. So it's going to be on its back like this, okay? Like a distribution. How does it form? 30-minute bar falls down. You remember the game Tetris? 30-minute bar falls down to the bottom. Okay, so it lands here. The next 30-minute bar falls down, and it lands here, but then it's going to kind of break and fall as low as it can go. That's this Tetris game, okay? The next 30-minute bar is, let's say, here. It's going to fall all the way down, and let's just say it goes here, here. The next 30-minute bar is this, and so it's, let's say it's a little bit right here, and then here, and then here. So look, now let's rotate this back up on its side. Well, guess what? We've got this profile that's forming, right? It's literally 30-minute bars that stack up, right? And they fall as far as they can against the edge of the profile. Volume is on the other hand, it's literally how much volume is traded at this price, how much volume is traded at this price, all prices, how much volume was traded there. Okay, this represents 100 contracts. This represents 200 contracts, right? 150 contracts, 300 contracts. And it just shows you on the y-axis how much volume like this, right? And there, see how it's more granular? There's a lot more going on. That's all they are. One tells you where price has spent time. One tells you where price has built literal volume, both on the y-axis. That's all they are. No, volume is not the same as value. Value is a term used by various traders to describe essentially one standard deviation of whatever you're measuring around. Oh, so that's where they're correcting their own question. I mean, where is more volume, there is also more value. Value calculations occur from it's math, right? And they typically occur from the mean, not the mean. Is it the mode? Anyways, well, the most traded price. So if it doesn't matter if it's, well, let's draw this better. Volume profile. So there's your point of control, your most traded price, your VPOC. Same thing for market profile. It's just your point of control, volume point of control or point of control. Or it could be this right here, VWAP with one standard deviation around it, right? Value area. Well, if we just take this area and especially on the profiles, and we take, okay, where did 70%, 68.2% of the trade occur around that point of control? That is the value area. It's just math. So it's supposed to represent kind of one standard deviation around the most traded price. And that's what this is up here too. It's one standard deviation, essentially, above and below the volume weighted average price. I really wish there was some more opportunity. I have that feeling just like you guys do when you're trading, right? I would love to create some opportunity out of thin air. I would love to be actively engaged in trading. I just don't have that right here, you know? No, the only trade I've taken was long from here. I think it was like scale, or something like that. And, or maybe it was scale. Yeah, I think that was it. And then the remainder stopped out somewhere around here after the open. That's all I've done today on the stream. Yeah, anchored VWAPs can be cool. I have found that using yearly, quarterly, monthly, and weekly VWAPs and intraday, of course, are plenty for me, and the anchored ones don't add enough value to what I'm already doing. I've looked at them many times. But I always tell people, absolutely, if you want to go the anchored route versus the fixed periodicities like I do, it could be just as good. Just as good. You just need kind of a way of doing it, right? Looking for those key kind of inflections where there was major shifts, and then maybe looking at some shorter term ones. People can get a little nuts with them all over the place. Then it's like, what are you really doing? You don't have really anything concrete. You're just drawing a ton of lines on the chart. So, you know, just like anything else, you have to come up with a process for it. And that can get much, much trickier for people rather than, well, I have these fixed ones. So HK's listened to me long enough to say, I know your position on anchored VWAPs, but for me, something they prove their worth. Take a look at the ones I've mentioned. I trade the monthly, quarterly, yearly, but dabble in anchored to define auctions. Absolutely, they work, right? They're a great tool. If I introduced them full time into my process, I would have to answer the question, what's their job description? Because the moment you introduce something new into your process, you have the opportunity for two things. It can give confluence, it can agree with what you already have, or it can provide dissonance. It can say, well, I know we're doing this on the monthly, quarterly, whatever, the standard stuff, but the anchored ones is actually here and is saying this. How do you handle that dissonance, right? That is what you have to answer before you introduce anything new into a process. Yeah, I mean, more power to you, man. They're great. My recommendation for most folks would be to kind of go all in on the anchored route or all in on the fixed periodicity route, and then, you know, so as to not overload your decision making, as Jay says in the chat. What else do fake prop firms do? They get a bunch of people to pump it, right? They run a bunch of like discounts and promos and giveaways and offer certain like freebies or benefits outside of the actual trading. Why is that? Who else does that? Oh, it seems like a casino, right? I don't know those of you who know anything about Apteros, but we send about 5 emails a year to you announcing mentoring classes or you know, something like that. We need to do a better job, but we are traders here. No, we love Ninja TV. We don't need Apteros TV. Everybody's popping up with their own TV these days. So I like Ninja. I'm not so sure Apteros is the price point we have is quite as expensive as many of you might think. You know, if it's, you know, $160 for a $4,000 drawdown, and by the way, there's an activation fee, so it's $320 to get going for your $4,000 drawdown. Mine is, you know, the same price, but it's a $10,000 drawdown on a live account. I don't think that's I don't think we're mispriced. I think a lot of people just haven't realized yet the truth about Apteros. That's part of the reason why I'm here on this stream today, is to be here and to preach it. Another thing you really want to look at a prop desk is the pedigree of the person who's running it. And if they happen to say that we give you support and help and training, what's the pedigree there? Who owns it? What's their background? Did they come from a sales and support role, or were they real traders? Who's going to be helping you level up? VWAP holding, that's one thing to note on this session. Once overnight, once overnight, twice here during the day session. This could be the third time. Multiple holds of one hold of VWAP, I think, is trivial. Multiple holds of VWAP or failures to sustain below it or above it, if coming from below, I think are significant, and they do start to add a short term, right? It's not like higher time frame context, but it is a short term context. Trades with Jesse, I wish that as well. I really do. But the problem is that I get charged, even though you're on sim, I get charged even if you use 1 day of data, right? I get charged from the exchanges. I get charged from the providers who offer the sim fill matching engine. We have to have support teams to do these things. There's cost to running this, which is why ours has a cost, right? I'm not gonna. I absolutely wish we could just, hey, CME, if you're listening, let's offer this for free to everybody. Let's. That'd be great. I wish so too. Oh, I love this question from Full Tilt. How do you go about keeping stats on NADRO setups? Talk a little bit about NADRO playbooks, right? They use quotes for setups and playbooks. I find it too discretionary to categorize. This is such a great question. So when you first approach NADRO, you can take a look at it and you can say, and then we're going to focus on idea generation, right? Not on execution, right? Because when you playbook something, you could include execution tactics if there were very key things for it. And by the way, smash that like button, please, guys. If you like what we're doing here on NinjaTrader Live, if you like me sitting here with you today, answering your questions to the best of my ability, hit that like and subscribe for us, please. So this is a fantastic question. It deserves us diving into. When you first take a look at NADRO, it can be overwhelming because we have yearly development value high, or let's just say, no, let's name all the references, right? I'm not even going to mention the plus and minus 2 or the 1.5 or the 0.5 or VWAP. You have yearly development value high and low, yearly prior value high and low, quarterly development value high and low, quarterly prior value high and low. The same group for same 4 references for the monthly, same 4 references for the weekly. That's 16 references. Then we get to the CVA, market profile structure, or volume profile if you prefer. That's a lot of moving pieces, right? And so classic NADRO is, and this is why I felt comfortable releasing it to the public, everything I know about it in the course, is because it's not something that someone could take or some big firm could run with. By the way, There are people at some of the largest funds in the world who have gotten track records and gotten seats on those desks who are students of mine. I hate it. I wish they were just trade for me, but that was what they did. We have one at one of the largest energy trading firms in the world. So anyways, I digress. You have all these references. How in the world do we put it into a playbook? How in the world do we like structure all this to where you could say with all these, let's call it 16 plus, let's say the most recent CVA high and low, 18 references. We haven't even gotten to intraday or overnight, right? How do you possibly playbook something like that? Does anybody know in the chat? I know there's a delay, but I'll give you guys a little bit of time. Yeah, if you game the prop firms and you do end up with a few funded accounts, then what do you do? How do you build that career? What have you done? What have you done with your time and your money to get to this place to now be in that position? What do you do with your career from there? You're not ready. You're at square one. You're at zero. Come hang out with us and learn something and start building a career. Ranking and distilling is a huge thing. Choosing a lane, right, I think is important. What Jackson Trades says. I'm going back to the conversation about NADRO, narrative, playbooking, things like that. Kendrim says weekly IPBs and intraday extreme fade. So he's kind of like picking some things, right? Kind of like Jackson Trades said, choosing a lane. Find your niche. What you're most comfortable with. That's, again, I think, again, the theme here with the answer is kind of simplification and narrowing. And I think that's important. And look, when you first go through the course, what's one of the weeks early on before we ever even introduce long-term VWAPs? We look at profile structure and we look at basic return pullbacks and breakout pullbacks with a basic execution model, right? With the Heikinashi. That's whatever it is, week 2 or week 3 of the NADRO course. So simple is very good to build from. That's kind of one of the first things that we could all agree on, rather than trying to do it all early. That's a mistake. That's a big mistake. LT, you can go to our website and find out everything about us. So I think picking a lane, simplification, why is it that no one knows our website? So Mr. O, does your firm train or fund traders? Question mark. Go to our website apterostrading.com, please. So I think when we expand from there, from, let's say, breakout pullbacks, return pullbacks of structure, you might just incorporate one long-term VWAP like the weekly. And then you would look for confluence where you get a breakout pullback or return pullback of structure, preferably a CVA, with an extreme fade or IPB on the weekly, right? So that would be a way to start to build narrow, simplified, focused playbooks. Now, from there, you can start to incorporate additional timeframes. You can start to pick and choose which of the references or even timeframes that suit you best. For example, yearly and quarterly timeframes are huge. 9 days out of 10, if not more, they really don't matter for the day trader. They're everything for the swing trader, whether or not there's opportunity there or not. But for the day trader, and this is another thing that's so beautiful about NADRO, is you can apply it to swing trading. You can apply it, these principles, and picking and choosing those timeframes. So you kind of figuring out who you want to be as a trader is a big deal for you, kind of starting to narrow that focus and build that playbook. I will tell you that the sweet spot for a lot of intraday position traders, okay, for NADRO traders, intraday position traders, that is, I look to get in at potentially the best spot of the day and hold it maybe to the close, right? But I'm not going to swing trade it, and I'm not just scalping it for a rotation, right? Position trading, intraday position trading. The sweet spot is typically a combo, a rare use of yearly, quarterly, very rare, with a sweet spot combo of monthly, weekly stuff, right? Oh, look, this is a monthly extreme fade with a weekly IPB, or this is, or with the CVA structure, right? Those three things is a real sweet spot for, I think, intraday position trading. If you go into the scalping, that opens up a whole new world of not needing to rely on context as much, being much more order flow driven. And that's why the scalping course exists, is because it's more specialized. It is a niche within the NADRO world. You can combine the two, as I do. I am kind of going back to real-time markets right now. I'm still kind of looking. It looks like we may not get it while we're on the stream. Let me just do a rectangle. I'm still looking for this to be taken out to look for that trade. This is nice and flaggy. Really hate it. Which, you know, obviously there could be a break of that flag. But that's what I'm looking for. There are a lot of NADRO scalpers out there, and no, it's not open source, I wouldn't say. The course alone is often not enough. How about that for some hard-hitting advice? The course, my NADRO course, is probably for most people not enough. That's why we have our community. I think you need to put yourself in a position where you say, all right, guys, here's my view on NASDAQ today. And maybe some other folks say, well, I really agree with that, or I disagree with that, right? That is how you start to get really good reps in. You start to solidify concepts, correct things. And that's also why we do the mentoring. You get to work with someone who really, really knows this stuff, myself or someone else, and really dial it in and make sure we fix what you don't know. A book or a course is not going to change your life overnight, let's say. Ooh, this is a good question. You're green for the day, going against your own rules. Call it quits and take a walk. If that's something that happens to you frequently, have a rule. Okay? Which is tough because this is going to be another pitch for trading prop. You're already breaking your rules. Why would you follow your rule about quitting and taking a walk, right? It's tough. You're that baseball pitcher on the mound. You've walked the past 3 batters, and you still think, you're competitive, and you still think you got what it takes and you can do this. Well, guess what you need? You need old Bobby Cox strolling out of the, coming out of the dugout, coming to get you. And you're mad, so you spike the ball down and walk off the field. That's what you need as a trader a lot of times. Hopefully not a lot of times, but that's what you need. And that's what prop can give you. No, we do not currently have a physical location. We are a online prop. But I have rules around on my desk for my traders. For example, if you're actively trading, you need to be reachable by me via Discord within a reasonable amount of immediacy. Why is that? Because it's like a physical desk. I need to be able to lean back in my chair and look down the row at you and say, hey, Johnny, tell me about this stop placement you have right now. That's why I demand that of my desk traders, is because we're trying to make it. I came from a physical prop space, and I'm trying to recreate that environment, but make it global and kind of the best of both worlds. Greg Maddux. Oh, Greg Maddux. Nobody could. I'm not a huge baseball guy. I played it growing up, and so being from Alabama, the nearest pro team was the Braves. So yeah, that whole team: Tom Glavine, John Smoltz, Greg Maddux, Chipper Jones, Andrew Jones. Yeah, those were my guys that I like to watch. Yep. John Rocker, briefly. Yeah, Joel, that's wild. Well, Randy Johnson was with the Mariners, right? But he was obviously a fun character. Oh, Klesko, I forgot about him. Was it Ryan Klesko, I think? All right, we're breaking through the low. I'm going to focus from 90s Atlanta Braves baseball to current day NASDAQ. So let's see what's going on here. We have what's called a 3-wide poor low, right? A, B, and C period, but C period's trying to kind of get through those lows. I'd like to see it do it on a little bigger scale. Isn't Greg Maddux like a scratch golfer now? I guess what ex-pro athlete isn't a golfer? Michael Jordan, even current pros like what, Steph Curry, he's scratch, isn't he? Tom Brady, Kelsey. Kelsey's not that good, is he? I don't think Kelsey's scratch. He doesn't have a pretty swing. comment of the day there. I don't think Mike Tyson plays golf from MW. I once sat at a bar with Charles Barkley right beside him, chumming it up for like at least half an hour with him. I got out of my chair. This was during the time, and I am getting long here. This was during the time when he was on that golf show and he had that awful, awful, awful swing. I got out of my chair in this bar and did a rendition of his swing, and I was just jabbing him about what is wrong with you? Why do you do this? He was just laughing, and I mean, we had a great time. Me and Charles. It looked like a seizure. I think that's the best way to describe it. I like the trade here, and yeah, this is what I've been looking for.
Merritt, good morning, buddy.
Oh, good morning to the Stowe man.
How you doing, dude?
I'm good. How are you?
Oh, fine.
Did you see what Deli did to me when I signed on?
No, what did he do?
Oh, dude.
What happened?
They put some filter on me and made me a cat and wouldn't take it off. So, like the iPhone thing where it's like you but an emoji?
Yes.
They did that to me, bro.
Oh, that's pretty funny. I'll have to go. Oh, nice. Wow, we got the producers have some technology in working right now. This is good. This is Merritt Cat.
I don't even know what to do right now.
Well, is that cat trying to buy this previous week high right now? That's what I'm watching, but
Yes,
I don't know.
I just bought that little momentum shift and I just got stopped. And so I'm kind of in that like stock re-entry mode, trying to catch this low right here.
Yeah.
I would love to see just a little bit, something of like a flurry and an energy release, just to kind of clear it out a little better before it turns. But I will be chasing every turn higher around here, including this one.
ES is doing weird stuff. Also,
Oh, yeah?
I don't know. I've been wrong pretty consistently this morning, so I'm gonna take a second. I want to buy this previous week high. ES is about to run its overnight low though, and it's just I mean, they're just walking it down. It's been weird. I thought that I thought I caught a really good bounce. I was playing for low of the day at like ES was at 63.15 and had a big bounce. That was that kind of resistance that's been there all week, maybe for 2 weeks. But NQ hadn't quite gotten down to its spot yet. So I don't know. This is yet another day where the NQ ES divergence is messing with me. So I'm probably best served to sit out for now.
Okay. So what is, oh wait, I was prepared for this conversation.
Oh, good. Do your trade though.
Yeah.
Don't let me mess you up.
Where is it? Oh, here it is. Got to come out of full screen here. My parallels. Is this what we're talking about? Like this separation here? So S&P is lower recently compared to NQ? Is that what we're talking about?
I guess it's not like, I don't know. It's just intraday decoupling. And I didn't realize how much I relied on ES as part of a I don't know, part of my decision making until the last couple weeks when it's been doing this back and forth like this. I'll try to hop in that. But yeah, I really have. And I really do rely on it quite a bit. So it's
I
been
didn't know that about you all. Well, I can't wait to pick y'all's brain on it in person in October. It'll be fun.
Oh yeah, me too. I'm gonna go I gotta get some new sticks.
Oh, you're getting new sticks?
That's my plan, yeah.
Woo.
I didn't realize I've been playing with like my golf clubs that I had in high school this entire time. And I went golfing this weekend with my brother-in-law and my dad. And my brother, there we go. Come on, baby. Be somebody. Nice. Okay, cool. Good.
Did you get in?
I did, yeah.
We
I'm
both
in
just banged in at the same time.
I'm in at 102. I got one off, so we'll see what happens. I would like very much for this to be the low of the day.
102. How'd you do that quickly?
I don't know.
What time frame are you watching for that?
I've got the 750 vol.
Okay.
I just hit
I'm
Alt.
just old and slow.
No, I just hit Alt B down there. Probably got lucky, and it's coming right back on me. So don't get too happy. That was just a tease. But anyways,
selling on this drift lower.
No.
AKA they're about to just destroy us.
Wouldn't be the first time. I've seen this movie before too. I might be spending the next hour in Q&A, no trade mode. No, I went golfing with my brother-in-law, and he was like, "Why don't you try?" He just got new irons, and he's like, "Why don't you try these irons?"
What were they?
I have no idea. But my irons were like the John Daly irons from Sam's Club from 2005. And I swung it. I was like, "Oh my God, this club like swings itself." And he's like, "Yeah, dude, you need new clubs." It's like, okay, fair enough. I guess I'll stop being cheap and get new clubs. It's hard for me to not be cheap, but
I think irons are something that you could have for 10 years and probably be really, really okay. Yours may be older than 10 years. I don't know, but
they are, yeah.
The woods technology, the drivers, that needs to be every 3 to 5 years. I think.
Okay.
Be updated. Whether it's distance or whether it's forgiveness, they're helping you out all around, you know.
The thing with whatever iron I'll figure out what it was, so I can tell you. But whatever he let me borrow to swing, it was like, it's what the weight was. I don't know. My irons that I bought from Sam's Club in 2005 were, you know, they're just the same weight. But this felt like, I don't know. It was swinging itself.
The shaft makes a huge difference as well.
Yeah.
The weight of the shaft makes a big difference. The flex of it makes a big difference. So there's a lot going on there versus just the head of the club as well.
Well, yeah. Well, I can't suck in October, you know. So I got work to do.
Well, new irons guarantees you won't suck.
All right, cool.
That's good. The answer to all golf woes are new equipment.
My other thought was I should go establish a really terrible average right now, then get new sticks, and then, you know, I can sandbag when I get down there.
Yeah. Yep.
Also a strategy.
Yep. As long as you're on my team, man, that is totally cool.
All right, cool. That sounds good. All right. Well, cautiously optimistic right now. I don't know. This day,
I hate to see the stall. You know, it's just so.
No,
but you know, it's one of those things where you have to continue to remind yourself, this is not the clean momentum vol environment that we just came out of, right? You have to kind of be able to sit in the mud with these trades a little bit versus where that would have been an appropriate let's scratch out of this warning signal type of thing for me, before. So it's a big deal making these adjustments.
Yeah, man. Mud is right. Mud is a very good way to say that. I have felt like, every trade I get into gets extremely sticky, just like this. ES looks better again. Maybe I should just move over and trade ES. Maybe it's time. That's when you know that it's been a struggle bus couple weeks, when I start saying things like that. Crazy talk like move over to ES.
Maybe I'll just go to the 30-year.
Yep. Can I be a tick scalper?
Yeah.
Yeah. The constant reinvention. Yeah. That's a drawdown sign for sure.
It's a cry for help.
It's yeah. I gotta pull my higher time frame stuff too. I don't think I've done that yet on this. Okay.
The metals, though, man, I was talking about this earlier. Gold, silver, platinum, those can be some really good trading vehicles.
I know. I got to look at that. I guess I'm just hesitant to get into those because I feel like those benefit from macro knowledge that I don't necessarily have. So,
oh, come on. You know better than to say that.
I know. Yeah. It's just an excuse. So I need to get over that excuse and just get in there and see what price looks like.
At your time horizon, unless you've got like some data you're crunching pre FOMC or pre CPI, and that's a part of what you're doing, you're not trading those. So
no, I don't do that.
The macro's not changing over your and I's hold times here.
All right, what metal should I look at? You tell me.
Start with gold. That's the one with the most volume. The
all right,
most standard.
Tracy and Jim almost got me to look at palladium the other day.
Palladium.
Yeah.
That's one that I have never looked at myself.
Yeah, I don't
Didn't Crudele talk about didn't they get him into swing long palladium or something like a month ago? Oh yeah, Tracy, it's platinum. Platinum is the much more standard.
Oh, not palladium.
Than palladium.
Sorry,
Stowe's
Tracy.
over there. I'm trying to get him to ease into gold. He's trying to trade enriched uranium, and I'm like, buddy, let's just dip the toes.
Is palladium even a thing? That's a thing, right? Okay.
Yes. But platinum is a much more tradable instrument.
Okay, palladium does exist. Thank you. Okay. I'm just saying, has that
we're not totally crazy here.
Is that was that part of Back to the Future?
Great Scott. Palladium.
Well, the problem with lean hogs, Julio, is that it closes. It's got weird hours. I don't know. And also, I'd have to pony up for more broker fees. And we've established I'm cheap enough to still have golf clubs from 25 years ago. So,
in all honesty, so what did you shoot this weekend?
I shot an 88.
Okay.
Not great, not terrible.
Yeah, but also you're not in form. So I mean,
yeah,
I play all the time and I throw up an 88 sometimes. So that means you have a tremendous baseline.
I did. I'm also working on a new thing, trying to eliminate my fade, or at least figure out how to control it a little better. I've always had a fade my entire life. I'm just coming across the body in general. And I think I figured it out. I at least figured out something I can do to tweak it. Whenever I get in line at my stance, if I pull my right foot back about 2 inches,
so slightly closed stance.
Yeah. Well, it's just pull right foot back 2 inches. So it's
and you're right-handed, so that's your trail foot.
Yeah. Yep. I was amazed. I'm like, oh my God, I'm hitting the ball straight. It
allows you to come more from the inside because you're closing your body relative to the target line.
Okay.
So it allows you to come from, instead of an outside in, it's allowing you to come from more of an inside out path.
Interesting. Okay. Cool. So that was good. That was also part of the experiment this weekend too.
Nice.
figuring that out.
Nice.
It's weird. Like having golfed my entire life, and you're so used to watching the ball just tail off and have a fade. When all of a sudden I'm hitting the ball straight, it's an extremely weird feeling. I'm not used to recognizing that pattern yet.
Missing greens left.
Yeah, exactly. Yes. Yeah, that's never happened to me before. So, but it was cool. Either way, I'm excited. I'm excited for October in general. It's
Nice.
going to be awesome.
All right, so we've got a rotation up. I'm
Mhm.
seeing sellers now come in, but it looks like they're getting a little bit absorbed. What do you think?
Well, I want to hold this 25. I want to hold these guys here. This was a passive seller that got run over. So as long as we hold this, I might add up here. If we can get
I
back
added a little earlier. I don't know if I didn't call it out, but when we were pressing above all those little highs for the breakout of that area, I put on what I call like a momentum lot and added a little bit. So I'm with you.
Okay. Yeah, I still I don't know. ES is still struggle bus. It's back below this 6310 spot. So I guess this is my I hate initiating around the IB, but yeah, I'm just going to watch this 25 to 20. This blue team right here. We'll see. Blue team needs to pull one out. What a nasty. I also struggle on CPI days or whatever. Yeah. CPI days are also a hitch for me. I don't know why.
I guess we'll have to pick Tanya's brain, right?
Yes. Yeah, she told me yesterday she was waiting for CPI.
The CPI day queen.
I guess that she said she was stoked for it yesterday. Which I've never once been stoked for CPI.
I'm never stoked for any econ release. I'm just like, oh,
either, man.
Get it out of the way so I can trade.
Yeah. Good ad.
Nice, dude.
Good ad so far.
I will be looking to peel some off personally here into VWAP.
Yeah.
I'm looking to see if they can just get a little burst in delta here, just kind of short-term capitulate the up rotation. But if they start taking it down, I will take that scale. But I'm trying to milk it for as much as I can.
Yep, this little node. Come on, baby. You can do it. A new high would be encouraging. I don't know. I'm using all my tricks, Merritt. It's
Here it comes. Just a little energy release. Come on. It's too muddy. It's just so muddy.
Yeah, man. There's so much offer up there too. It's so thick.
Oh, really?
There's like 10. There's 10 lots on every price.
Really?
Yeah. Like 48 to 55 has got 10 to 20 to 30 lots, like at least every other tick. Which is it's way too much. That's way too much for NQ.
Let's go. Let's take them out.
This is supposed to be the thin market that moves quickly.
Not into the middle, not into VWAP.
Right. Yeah.
All right, buyer's trying a little.
You got to cross the spread, Mr. Bid. You got to cross if you want to go higher. Yeah, we're still in this big. This is still the road to. This is still this.
Yep, I'm scaling right there.
Yeah. I stepped on it.
Do you want me to get off your stream, by the way?
Oh no, Merritt, I don't care.
Scaling some more.
This is our stream. This is everybody's stream. I might be Deli's stream, actually. Shab's stream.
Yeah. This is Jimmy Cagg's world. We're all just living in it.
That's true.
So yeah, I scaled out of 2/3 because it makes sense to see a down rotation here, you know.
Yep.
The people's stream, says Fat Fish. That's right.
The people's stream. Similar to the people's elbow. I think Jim would appreciate a wrestling reference.
Yeah.
Jim, you in here? The trader stream. There he is.
Okay, so now that I'm scaled, I at least feel comfortable handing off the baton here to you. Kind of wrapping up what I did with folks today. So
cool.
It's essentially similar position to last week. Either we've caught low of day here and we get a runner and something to run stops well above, 23,200 up into this upper extreme for the session, maybe even overnight highs and whatnot up there. Then fantastic. If not, then we'll still have captured finally a little decent day here. But yeah, you guys are in good hands with Stowe now.
Thank you, brother. Yeah, decent days are not coming cheap these last couple of weeks. So it's nice to grab it when you can.
Oh yeah.
I put another one on there at this 130 spot.
Really?
I still like it. Yeah. Yep.
Okay, so that that's interesting. That makes me not want to leave and to sit here and talk to you.
That was a nasty sweep. What do we got? 11:15. Yeah, they just jammed it in my face though, Merritt. So I'm gonna take a stop.
Saw that. Getting a little squirrely right here. Here
Something's
comes
going on.
Right back.
What?
All right, brother. Much love. Take care. Trade well. See you, chat.
Thanks, homie.
Jimmy Cags.
Appreciate you, buddy.
Yeah,
I will.
you,
I'll try to. I'll try to not blow it.
Hey, go Strix on irons. See you, man.
Yes. Peace. Yeah. He has back down to this 33.05. 77. Sorry, chat. Give me a second. Give me a quick moment to watch this Delta do its Delta business. Switch back to this guy. $47.57. Got a bunch on there. I like that exhaustive push right here. If it can hold, it's getting weird. We got to move the stop up. Slacking. That was way too big. Okay. Lift. This offer could get out of here. It's once again, my 30-second London opening range is being weird on this chart, but it's right here. We're coming up right into it, this 140 spot, which was previous support a couple times. So this is going to be a total pain to get through if we're able to pull it off. And this is not really, doesn't have that gusto, you know? So we got 10 minutes till the close. pinging off this spot still. There's still this buyer here. I just need this offer to leave. Man, straight into the weeds today. This is way less chill than yesterday's stream. I got done with yesterday's stream. I was like, oh, that was nice. It was relaxing. Not today. Coming in hot. Yeah, so we've got some red team, blue team going on right here between this 130 and 140. You got to want it. You got to want it, Mr. Bid. And we'll get this view up. Come on. Take him out. Super offer again right there. It's all the same to me. Somehow Lucero coming on my playlist. That's cool. I haven't listened to Lucero in a long time. Anybody else see this bid down here? Am I crazy? All right. Switch back. Hey, JS. Yeah, Lucero's been around forever, man. Always was a big Lucero fan. Ben Nichols' solo stuff, also very good. All right. I really hate that ES is stuck back below this 63.10. Could pop it here. Come on. Come on, baby. What am I doing? Am I being a D for a T? Possibly. I'll take that one. Tuck this guy back here. Get this open. We're going to put this at the point of control. See if we can get some covering into the close of London. All right, here's our TH VWAP. It's going to hit because I covered two. I took it off early, so this is guaranteed to fill now. Yep, bang. Okay. Just give me a second, chat. I see some. Hey, Job. Good morning, buddy. I want to do my good mornings. I want to do all my feel good stuff. I'm just trying to watch this stupid trade. Been fighting for this low all morning, so. Studied it too. Man, sick jams. Spotify is kind of hit or miss with the shuffle function, but It's doing a great job this morning. Stockholm, let me go home. All right, we're finally in another leg, so that's good. Brand new rotation. Let me try to, I'll get that green line back on here. And birds on the bluff. All right, what green do you guys want to use today? Let's do dark sea. Oh, whoa, my position tracker updated too. Nice. I thought I did that wrong. Cool. Nice. Ooh, this is nice. All right, so it says like, it gives me my average price. I don't think that is accurate profit though. I'll have to mess with that. Anyways. All right. Oh yeah. Yes, Merritt. I was singing Jason Isbell. Stockholm just came on after Lucero. Merritt, do you like Lucero too? I would imagine that you know Lucero as well. Mark, 60. Of course, cool. Okay, good. All right. Anyway, let's go back. Good morning. Good morning, chat. Good morning. Hey, good morning, Chris. Thank you, buddy. Thank you. I'm trying to kill it and not be killed. Couple things I need to happen here. I need Job to move his pivot. Job, if you're listening, please move the pivot. And then Leo, I need you to move this OR mid also. That would be good. I need both those things can happen. Then we should be good to go here. I'll put this here. I need to find 6075. That's good. Press it now. Omni, you trading the Russell? All right. Godspeed. Good morning, undercover scammers. Oh, okay. Indurandi says, where can I find the red blue standing order ladder second from the right? Oh, so this is a delta volume profile, and that's part of the order flow labs tools. So you can pop that on there once you get those. So we're coming up to this ledge now. I'm inclined to take that off there, but the bid's still pretty strong. Let's see if ES is finally out of its feelings. Not really. Not really. Yep. Back in this down. I think I watched I watched ES kick off its this area between 63.10 and 63.15. I don't know what, like 1,000 times last week. and this week, and like yesterday included. Obviously, that was the previous day high, 63.15, but this whole area has been a silly mess. So it's going to take. I just don't like being back below it. It does not instill confidence. Again, these stops though here. Trying to watch this. Stair step, puke. Hmm. Yeah, scary. That was a reference to Dusty Rhodes, people's elbow. Showing my age a little bit with old school wrestling references, but what are you gonna do? What are you gonna do when you're old? You're old. There's nothing you can do about it. All right. See if I missed any questions. MHERR00 asked me to explain my entry strategy. Try to buy with buyers at locations where buyers should probably show up. I guess that would be be my strategy. I don't know. We came down into so I use ES and NQ both for Confluence, and I tried to buy the previous week high, which was at like 23,000 111 ish. And that sucks. Now we're getting pushed back off this ledge. All right. Don't want to be greedy. We'll scale one more there. We'll see if this seller is really going to party or not. But I like this low. I like this. All this is good so far. It's okay to get a pullback. It's fine. Work too hard. Be Water Tiger Trade. That's a cool name. Yeah, I mean, don't look to me for confidence in your entry. But I'm glad I can help. I'm not. If you're confident in it, I'm not sure I'm confident in it. Yes, just rejected this dumb spot again. But I don't know. We'll see. We'll see if we're in a new leg or not. Oh, nice. Uncle Tupelo's good. Room 550A. Good to see you. Yes, Wicks and Dreams. It would be nice if ES could reclaim the IB. Hey, Nick. Morning, brother. All right, now we're retesting this guy that we broke through before. So this 140 guy that we chewed through, it took forever on this leg up. Coming back to see what he's up to in this little tiny node. Let's see. I got one selected here. I'm going to add one. Quite wiggly. It's doing the wiggle. I don't know what kind of expectations I have for this. I should also probably try to temper those. Obviously, made we opened at the overnight high. I've been noticing when that's happening the last few times it happens. It's been kind of a nasty retracement into a balanced day. Just anecdotally, that's not like stats or anything, but there's some bid. I like this VWAP change. We're kind of like this is curled up. We're not sloping. We're at least still in. We're not fighting a trend at the moment. Hey, Con. Morning, brother. How are you? I don't know. It's like there's a lot of bid and there's a lot of offer right here too. So, um, it's just a busy spot we've chosen. So, I like being above this 140. If we can stay here, it took a decent effort to get through it to begin with. So, there's some good initiation there. It's like you got to find a balance between, what's a pullback, what's a reasonable pullback, what kind of leg are we in. That's where this helps me a lot. The delta volume profile, just resetting the different legs, or like even when it's, or alternately if it's not resetting at all, that's another clue all the time. So, all right, our ad's at 47. I'd like to get to the other side of this value here. So we'll tuck this down here. How does it move so fast on my computer? I don't know what you mean. What do you mean, bud? What am I listening to right now? This is just like I just made a giant playlist that I just call Country Jams, which is just like folk music. This is currently it's a there's a lady named Ken Pomeroy, and she's awesome. Great voice, good songwriter. Yeah, they're volume candles. It's 750 volume. I mean, it's a similar feel to a 30-second 1-minute chart. I mean, I would say 500 is closer to the minute chart. Well, the point of the playlist, Omni, is to elicit calm vibes. It's supposed to be chill. It's supposed to be chill inducing vibes. No, not like John Denver. It's what I would consider the country music that I like. I consider it like sad boy country music, emo country music. Just singer songwriter stuff. Jason Isbell, John Moreland, um, Justin Townes Earl. I don't listen to Justin Townes Earl a lot anymore because my daughter was obsessed with him when during COVID. So we kind of burned out Justin JTE. Rest in peace. Back then. She was so funny when she was a little kid. She loved Justin Townes Earl's music. She would just be glued to the TV. We would put on like he's got some cool shows. A couple South by Southwest performances that he would do, and she would just be mesmerized. And she was just like 2 or 3, just like amazed watching him play live. Yeah, Chris Steele. Yep. Sierra Farrell. No, I don't know who that is. I'll listen to that. Charlie Crockett. You guys are giving me good stuff here. All right. Thank you, chat. Charlie Crockett, Sierra Farrell. Okay. Cool. Ryan Bingham. I think I know who that is. Sturgill Simpson for sure. Absolutely. Currently I've been on a really big American Aquarium kick. I don't know if anybody knows who that is, but also a great country rock band. BJ Burnham has a good solo record too. Well, the ad's working. New high would be encouraging. And by encouraging, I mean that's the only way we're going to turn this into not a balanced day, is if we nip this guy right here. Hey, you guys all like folk music. This is cool. Core Blund. Okay. I got a cool list here. Thanks, guys. Oh, yeah. I like Trampled by Turtles. Yep. Absolutely. What's going to happen? Can we get the push? It's trying. Oh, Lord, it's trying. There's nothing better than when you would like a push, but instead of a continuation push, it's an exhaustive push, and it comes up just shy of your take profit. Few things are as annoying as that. Yeah, coming in on these lows here. Is that all you got? Is that it? What am I waiting for, undercover scammers? Patient for what? Well, my target's arbitrary, you know. Be patient for 1,000 points profit. Fair enough. We go into let's just go straight to 25K while we're at it. No reason not to, really. What's this dumb thing doing? Yeah, look at this balance day. Left that. I'll probably fill this in. Fair enough. Thanks, brother. Yes is building this big ledge here again. It's 63, 14, 15. I've seen this play out so many times this week and last week. Chill guy. Chill guy with the all caps, big stow. Good morning, dude. Good morning. What's my average winning points? I don't know. I would say it's probably like 25 to 30 on average. I take my first target at 10 and the second target is normally well, I don't know. If I'm averaging 1.2 no, yeah, it's probably closer to 15 to 20 is the average. Yeah, it's probably 18. I think my stats are showing a ratio average for the last 4 weeks of 1.2 risk reward. And I start off with the 15-point stop loss and adjust from there. So let's go, you turkeys. Yeah, man. Wicks and Dreams. That's a good screen name also. But yeah, it's just been, I was telling Merritt the same thing. It's just like it diverges and then it sinks back up and then it diverges, it's divergence again. So, hey, undercover scammers, we did it. We did it, homie. Very nice. Thanks, buddy. I appreciate you. Yeah, I got to think that I don't know, my position tracker can't possibly be right. I mean, I got 28 points open, which is you know, like it's $580 or something, not 1,045. I wonder where that's calculating that from. The risk is right. Maybe there's a setting in there I got to mess with. Honestly, I just threw it on there, and then it didn't look like it worked, and so, but then it magically appeared after I added the London 30-second OR. But wait, do you guys see this? It's gone again. My zone's gone. Yeah, hey Jude. I mean, that was the target for the primary, but I'm also looking at ES, and it is, it's grinding itself up from the bottom. It's trying to reclaim its previous, get back above its previous day high. So this is how I'm using them together, in concert. So we're in this leg, we're in this up leg now, which is, it's behaving, it's doing the things it should do with pullbacks, etc. So I can tuck that back there, but looking for continuation higher as long as we can hold, this, but we could also retrace from this, and then ES gets back below its previous day high. But there's a ton of bid there, so I don't know. I don't know what the hell is going to happen. Nobody does. Oh, corner roller. Thank you. Okay. Oh, nice call. So as I move this. All right. Thanks, dude. Hey, Jim.
Still,
Morning, buddy.
how are you?
Oh, fine. Getting banged up a little bit today, trying to position in this mess, but otherwise good. How are you?
I've been watching. I've been like grinding my teeth a little bit, wondering about the precarious nature of your stop loss.
Oh yeah, was it? Yeah, it was in a weird place for a while because I was too glued to the delta. I wasn't dragging it up like I should be.
I was like, all right, he's gonna do it. He's gonna do it. He's gonna do it. I got some more gray hairs over the whole thing, by the way.
Well, that's what I'm here for. Number one. Number two, I got to keep everybody on their toes. I can't just do everything perfectly with no suspense involved.
That's true. That's true. But you did come up with a great name for a rock band, I think.
What did I say?
Target's Arbitrary.
Target's Arbitrary. That's nice.
Be a good band, right?
Yeah, that's good. I like that.
Yeah. Wow. Oh my God.
Crazy. Wild day again. Yeah, I can't believe we just pulled back into this. I'm more annoyed at ES than NQ at the moment. But yeah, we're just back in this range again. This cursed 6,300 to 6,315 spot.
Yeah, ES doesn't seem to want to stray too far from 6,300 these days.
Nope, sure does not.
Kind of likes it there. A little bit above, a little bit below. But
yeah. Well, I don't like it there, Jim. I liked it much higher.
Well, yeah. You, me, and most of the civilized world, I think, is right.
Randy says the Dow is at weekly lows. So the Dow is selling off, dragging ES with it. That makes sense.
I wonder if there was a earnings component that went awry because we had some earnings this morning, I think.
Yeah, possible. Oh, yeah. Don't banks start?
Yeah, the banks came out good, though. Banks were pretty good. I saw JP Morgan, Citi, Wells Fargo, and one other one.
Okay.
But just, when you look at the headlines, you just see the big metrics that they throw out.
Yeah.
So, but no, I think JP Morgan killed it. Like Jamie Dimon's making diamonds.
Well, banks are banks, Maybe they sold off on good news, though. It could be one of those things where good news is bad again.
Yeah.
You never know.
I know. That's why I didn't spend too much time analyzing that.
Nope, same. That's why I don't look at that stuff at all. Because I never know how the hell to read it. But
I know.
All right. Well, it was a decent trade. I got some good ads in there.
Yeah.
Good ads, good scales.
Yeah, for sure.
I'll keep working on this range, as long as they'll let me.
All right, all
Yeah,
right.
and then I'll see you this afternoon.
You're gonna be back this afternoon. Okay, very,
Yep,
very awesome. So appreciate you as usual. Looking forward to chatting again this afternoon. And in the meantime, take it easy a little bit.
sounds good, buddy. Thank you,
All right.
chat. I'll see you at 2:30.
All right, all right. I'm going to put up a couple charts really quick here for an edge report before we go to break right now, and let's just go ahead and take a peek. We've talked a lot about this market all morning. I just don't, we're not going to talk much about it, but this is the NASDAQ. And one of the things I found interesting is the symmetry of the session volume profile. It's a beautiful volume profile. It's biased toward the upside, right? You see that longer tail at the bottom, but the value area is very bell-shaped, very Gaussian distribution, nice curve. Point of control is right in the middle of the value area. We've traded through that point of control. This is a 30-minute candle. Every single 30-minute candle since the end of the London initial balance. So market kind of likes it here today. So it's acting as a magnet until it doesn't, right? Value area trading is a thing until it doesn't work. Right now, it's working pretty well, with that being kind of the center of gravity right here on the NASDAQ. I got the big NASDAQ up on the screen right now. The other kind of two other markets that were really kind of interesting to me, I'm going to go to the 30-year bonds. I know we talk a lot about them, but we're going to talk about them more. I'm going to start with the daily. So we continue to sell off here, and let me just drill in a little bit more. This is an old yield. I don't know. We're probably at 5% right now in the cash market. We're selling down, right? This area of support that I identified that started really back in the middle of June. We tested it yesterday. Buyers came back and brought us back up. I thought, oh, maybe, but nope. Today, another big sell-off once the market kind of adjusted to the news cycle. And now we're approaching the next area of support, which we tapped. We tapped at 111. 30 seconds. That is a 111 handle. That's a big deal. So we'll see if we get any more penetration to the downside, but this is looking pretty darn bearish, if I do say so myself. So we'll see how it goes. Let's take a look at the Euro FX, though. That's another interesting market, because this morning we talked about this 23.8% retracement, that 21 EMA, which is the green line, kind of holding a support. We had a wick down there this morning, but the body was a lot higher. And now we broke through it. We just sold off big time. Again, digested the news, whatever, this is what I think the market is thinking about the news right now, including the CPI print this morning. And nice retracement back down. Now we had to turn around doji back on the 1st of July. And now we're down from, let's see, what do I got? From that peak high, we're off about 1.92%. I'm kind of eyeballing it here. I'm not exact, but it's kind of a nice kind of retracement down. 38.1% would be the next stop down for this to be still kind of considered a normal retracement. The trend is still bullish. There's no doubt about it. There's no, we have a little bit of a bearish move down, but I'm looking at this as kind of a cycle retracement. So we'll see how it goes. Remember, the denominator is the US dollar, which means the US dollar is 1.89% stronger than the euro ever since July 1st. So we hope this trend continues going into my European vacation. So my euros are cheaper. Intraday chart really tells we have a point of control way up here, pretty high. Now remember, the Euro FX there's two sides to a currency pair, or to a forex pair, or to a currency trade. There's in this particular case, the numerator, which is the euro currency, and then the denominator, which is the US dollar. And we're really thinking about the differences between the two when you think about currency pairs. So you often see in these currency pairs here a little bit more, I'm going to say, volume than you would in some of the other, relatively speaking, in some of the other stock index futures, because the Europeans open up. This is the London initial balance that happened here. And so you can see a lot of volume kind of accumulated at this point of control. It's a little bit higher, a lot of it higher than the price action. So that's not an unusual thing. It's not something kind of to worry about, but something to notice as an observation. I don't expect us to get back up here. I don't expect this to act as a magnet. As a matter of fact, you could anchor a VWAP to a time frame. I could anchor VWAP to the opening, the ringing of the New York Stock Exchange bell, which would be from here to here, and we'd see a lot different profile. So keep that in mind. A lot of currency traders do that as well. In any event, we hit that 1-day min, that Menthor Q 1-day min, and then even wicked down to that JAX 4 level as well. Buyers brought us back up here, and we'll see if we get back into the initial balance on the Euro FX versus the US dollar. And that is our midday market Edge report. Appreciate everybody being here this morning. Great time today, all across the board. We have great guests, great contributors. We had a lot of fun with Merritt, a little bit with the cat. That was super cool. Production folks are very, very awesome. And of course, thanks to Stowe, Order Flow Labs, finishing strong for us just a couple seconds ago. We'll be back at 2:30. Hot commodities. Me and Shai, not sure the markets we're going to cover yet, but that's going to kick off the start of the afternoon session, and then we're going to get more Order Flow Labs trading the close at the end of the day. EH says, Jim, how do you look at the London initial balance? EH, if you save that thought till this afternoon, and I'll kind of show you how I add it to my chart and what it is. But I look at it as the first hour of the London session. All right. Having said all that, appreciate everybody being here. We will see you again at 2:30 this afternoon. Thank you.